Equity trading and Francine Lacroix in Singapore with Tom McKenzie in London.
And here are your top stories. The bounce fades. Asia stocks pair gains after China readies sweeping support for its ailing property market. US futures slide after the Fed's wallet warns of more rate hikes. Misconduct probe, FTX faces a criminal investigation in the Bahamas over the collapse of the crypto exchange. Sam Bankman-Fried is said to have been interviewed by local authorities. Plus, superpower summit. Presidents Biden and Xi are set to meet for the first time as the two leaders look to ease tensions. The first time since the pandemic. Francine.
Tom, let's look at the futures. So for the moment, they're pretty much flat. You can see the European stocks futures gaining some 0.3%. Now, I would say there's quite a lot going on, of course, in Bali. So it's all happening here in our part of the world, here in Asia. But I'm looking at dollar treasury yields rising. And again, this is because we heard from a Fed official, and he certainly did not mince his words, Tom.
Yeah, we know that they're concerned. They want those financial conditions to continue to tighten. We haven't seen that over the last few weeks with the rally that we've seen in US equities. In fact, the S&P is up about 11% over the last month. Of course, the context is it's down 16% year to date. But Chris Waller coming out and trying to pour some cold water then on these markets and the rally that we've seen. But these positive catalysts are there when it comes to China and that 16-point plan for the property market. And of course, that inflation print as well continues to work its way through the thinking of investors stateside. Here in Europe, you're seeing the open then in the green this morning, this Monday morning. The CAC going over in France up 0.4%. Here in the UK, the FTSE 100 up 0.3 as we look ahead to the autumn statement on Thursday, the importance of that for these markets. And the Spanish IBEX is up 19 points as well, a gain of 0.2%. Let's switch it over, see how things are playing out then cross asset. As I said, the context is over the month, an 11% gain for the S&P. The dollar as well, last week dropping 3.5%, the biggest drop that we've seen since about March of 2020. Euro dollar currently at 103. A little bit of pressure then on the single currency, just 0.1%. Futures in the US pointing low by 0.2. The 2-year 439, just adjusting to the comments from Chris Waller, then a move higher by 6 basis points. And Bitcoin, of course, within the context of the blow up of FTX, 16,844. That's a move higher of 3%. We'll briefly check in on the China markets as well, given that extensive outline in terms of a 16-point plan to try and rescue the property sector. Put on that, layer that on top, of course, of the announcements around COVID-0 last week, and it builds on that optimism when you think about China's assets. CSI 300, the benchmark, gaining just 0.1% in the session. Over in Hong Kong, the HSI up about 1.7%, and again, building on the gains of last week. And the yuan, currently, you're looking at the yuan up by 0.9%, 7.03 on the yuan. Mark. MLive managing editor, of course, Mark Cudmore, sitting in Singapore. And Mark, you've been looking at the Asia dollar index for us.
Yes, indeed, Tom. In fact, I love that dollar-yuan exchange rate. Might get on a 6 handle soon, which would be pretty exciting again, given that the doom-mongering around the yuan. And actually, it's the Asian currency I want to talk about today. So, higher dollar, higher yields. It's all been one trade so far in 2022. On the way up until a couple of months ago, and now turning down quite sharply last week. My nervous conviction, I'm going to say in 2023, they will not be one trade. They will diverge next year. And the idea is I think 2-year yields will make fresh highs again in 2023. I think that inflation will stay persistent, even if we might have seen the peak, and that ultimately 2-year yields will need to go higher than is traded in the market. But that'll be a theme for next year. However, that might provide some support for the dollar, but the dollar will not break 2022's peak. And the reason it won't is I think the Asian currencies have bottomed out here. Now, it's already the best month for the Asian dollar index since December 2008. It was briefly the best month since October 1998 when we were recovering from the Asia crisis. Both those two times set a kind of a slightly positive precedent. Back here, it was 2 years before we fell below those levels. In 2008, actually we fell lower in just 2 months' time, but then that was the big bottom for a massive surge over the next couple of years. So generally we've seen this big move. It is a good medium-term signal, maybe not an immediate signal, but I think the story in China has changed. Post-National Congress, it does look like they're focusing the economy. That means the yuan could just stabilize. And if the yuan can stabilize, many other currencies in Asia are discounted and have good external balances.
Look at that. Mark and I are actually in the same studio. The world cannot see it, but I'm a touching distance with Mark Cudmore, our Bloomberg MLive managing editor, and of course, most emerging markets. In Asia are advancing. I'm looking at the Taiwan dollar. It's up. As Mark was saying, China's policy on COVID are changing. Now, Chinese equities rallying after Beijing made fresh attempts to boost its ailing economy. Financial regulators issued a 16-point plan for the property sector on Friday, as well as measures recalibrating the COVID zero strategy. Well, joining us now is Tatiana Puhan-Tobam, Deputy Chief Investment Officer. Tatiana, thank you for joining us. What comes next? Can China be a reliable partner for the world economy?
Well, I think personally I have my doubts about it because in the end of the day, I mean, China remains a country that has an authoritarian regime that, does not respect in a larger sense civil rights very well. And I think this is always posing a large risk to investors that, we shouldn't underestimate. But clearly in the shorter term, they try to get this country and this economy out of a huge hangover that they build up. And obviously there's shorter term positive momentum, that investors could take advantage of.
And Tatiana, what is the read across then to European equities from some of the stimulus measures, or at least the restrictions and the easing of those restrictions in China and that support for the property market? There's some upside surely for EU equities on the back of this.
Yes, of course, because there surely is then the hope, that supply constraints, as we've seen them, that they will ease, that will help certainly industrials, for instance, in the EU region. It's also going to help, generally to revitalize trade. So in the shorter term, it's clearly positive, and also in the shorter term, I think, they will manage to stabilize the real estate market. That's also very good news. But in the longer term, like next year, there's another stack of maturities coming up in the real estate debt in China. So, we will see whether they will be able to also sort of overcome here, potential issues in liquidity and in repayments, that are on potentially on the radar.
But Tatiana, how difficult will this be for energy prices? So again, we have a very tight energy spectrum, elevated, of course, oil price. If China reopens, and if China reopens, kickstarting the economy, could we see oil much higher than it is now?
I think there's a limited upside to oil prices because I don't think that, this kind of kickstarting the economy is something that will happen from 1 week to another. So it's clearly something, that will take a couple of months. And so I don't expect like a huge impact, like a very immediate impact, let's say, on oil prices. And I think in particular, for the European economy, it's going to be much more, let's say, interesting to see how cold this winter is going to be when it comes to, impact of energy prices. I'm thinking in particular of gas prices. So I think in the shorter term, this is, what we should look out for in terms of energy markets.
And Tatiana, a different dynamic, of course, when it comes to energy and the inflation hit in the US. But we had Governor Waller coming out, Fed Governor Chris Waller coming out and saying, pushing back on the idea that there's going to be a pause. What is more important for markets? Is it the terminal rate or the pace and rate of the increases that we expect in the months ahead?
I think both is definitely very relevant. So I think the pace, is something that is relevant because it could mean that, the impact on the economy will be felt much more immediately. But also, obviously, the terminal level of rate is going to have an impact because it will really determine, how going forward, actually, a potential economic impact could play in. And I think this is what markets underestimate at the moment, that this usually happens with a lag. And that, 2023 is likely, to actually make us discover, these economic consequences, such as, job cuts, such as, lower economic growth. And the Fed might actually ignore them and might continue to rise rates if inflation remains at high levels, because we are talking still about levels above 7% now. And this is, all else but a good news.
So, Tatiana, given all of that, does it mean that we've reached peak yields, that we've reached peak dollar strength?
I don't think that we've reached peak yields. So I think yields can easily edge up higher than 5% next year. So that's really dependent on, how data will come in and how the situation with inflation will continue to evolve. So from that perspective, I wouldn't be overly optimistic now. On the other hand, for dollar strengths, I personally think that dollar has reached quite a strong level, and it might hover around that level going forward. So I think investors have priced in, the fact that the Fed is willing to act in a much stronger way than other central banks, and this is something that we see in the dollar price. But much more upside potential from here in the dollar is probably limited.
Thank you so much for joining us. That is, of course, Tatiana Puhan. Now, we're also getting some breaking news out of our great interview that our Anne-Marie Hordern did in Bali for us at the G20 with the Commission President, Ursula von der Leyen. And the one thing that we are trying to find out is, of course, whether the EU is ready to put a cap on the price of oil. And she says they are, von der Leyen saying they can count on the EU for having an oil price cap by the end of the year. Basically, they're ready to go. But she also said that there's still no price for the oil cap. That has not been decided. Of course, Tom, different countries will have different sensitivities to this.
Yes, there's still some more details to get out of the EU Commission on this particular price cap, but important in terms of moving the needle in terms of what we know about their plans there from that interview. Brent currently at $96 a barrel. That's just a move up of 0.5%. WTI trading at $89 a barrel. Right, coming up, Swedish fintech firm Klarna launches a new shopping tool with the aim of taking on rivals like Amazon and pivoting away, at least to some extent, from buy now, pay later. We're going to speak to the Klarna's CEO next. This is Bloomberg.
Digital-first approach to the future of work is where the industry and all companies will be heading.
Could the future of work not be at home or in the office, but in the metaverse instead?
There's that word, metaverse.
Doing well. How are you doing?
When I think about the metaverse, I think about immersive experiences that have a sense of active presence.
Wow, look at this. This is me. The metaverse is projected to become over $1 trillion market by the end of this decade. And whether you know it or not, you'll probably be working there in the future.
We're moving into a world where we're going to be interacting with computers with our bodies.
This is definitely trippy.
I think the adoption curve is going to be slow.
It's weird.
Like a weird floaty thing right now.
But look at you. You have no legs.
It's kind of a fun world, and we're just at the very beginning of a very long journey.
No one covers the world like Bloomberg.
The writings on the wall for the Bank of England. Just Stop Oil has spray painted the front door.
Recession in Europe, UK, and possibly the US.
Brazilians are out in full force celebrating the election victory of former President Lula da Silva.
With unmatched reach and resources from more than 120 countries, the moment news breaks 24 hours a day. Bloomberg, your global business authority.
From New York City,
From London, in Sydney,
from Washington,
in Tokyo.
9 a.m. in Beijing and Shanghai.
Good morning, everyone.
Have a great evening.
Here's what I'm watching.
You do not want to miss this
How
story.
are you thinking about those dynamics?
This is Bloomberg Daybreak with Lee.
On Bloomberg Radio.
Welcome to Daybreak Australia.
This is Countdown to the Close.
Welcome to Bloomberg Crypto.
Welcome back to the Open, everyone. We are 12 minutes into the European trading day, and you can see for the moment we're seeing gains across the board. Now, the DAX gaining 0.5%, European stocks 0.1% higher. Dollar Treasury yields also advancing. This after the Federal Reserve Governor Christopher Waller cautioned the policymakers had ways to go before actually ending interest rate hikes, Tom.
Yeah, and of course those interest rates are influential and consequential for the tech sector as well. So we bring in now a conversation of importance around that theme and developments as well. Klarna rolling out a search and compare shopping tool here in the UK, but also the Nordics, with the aim of taking on rivals like Amazon. The move comes 1 year after the Swedish fintech giant bought price comparison service Price Runner for a reported $125 million. Very pleased to say we're now joined by the CEO and co-founder of Klarna, Sebastian Siemiatkowski. Sebastian, good morning. You're rolling this product out then, as we said, here in the UK, also Denmark and Sweden. It's already active in the US. So how successful has it been in the US, and can you really take on big tech stateside?
Well, no, it's super exciting. And if you look at some of the markets, one thing that got us really excited about this is, like, if you look at the US as an example, these kind of comparison websites and so forth, discovery websites of products have not really existed since the early 2000s because kind of Amazon took the whole thing over, and VC money, investment money, stopped flowing into that because Amazon was so dominant. In Europe, we've seen this fantastic amount of companies that have, continued to innovate and created extreme great experiences for customers for discovering new products, for comparison products, for finding best prices, best availability. And now we're bringing this out to all of our users, both in Europe and the US. So it looks extremely promising. And in some markets, this is where people start their shopping. So it's quite interesting to see how we can develop that further.
Sebastian, and good morning also from Singapore. How much do you worry about the UK market? I know you've had to do some restructuring to deal with higher yields, with inflationary and the cost of living crisis. Do you worry that people will not be able to repay you come the hard winter months?
Well, I think that, one thing that I had the fortune, I don't know if this is the right word, but I did take Klarna through the financial crisis of 2007, right? And this is actually one reason I got stuck on the buy now, pay later model over the typical credit card model. Because if you look at credit cards, you borrow against all of your spending, your full monthly spending, you rack up debt of an average, like $5,000 average credit card debt. On buy now, pay later, you only use it for selected purchases, so you use debit for the rest. Our average outstanding credit is a few $100s at max, so it's $70 on average, I think. And so that's one thing. Our underwriting is different because it's per transaction rather than on this basis, and we don't try to push a credit limit in your face to kind of maximize your spend. Because you got to remember, credit cards want you to borrow as much as possible. That's the whole business model. That's how they earn interest rates, so they have to make you do that. So my experience has been that our model is just so much more works much better, especially in a recession like this. So that doesn't mean that you don't need to be a little bit cautious. Do challenge yourselves on your underwriting, the risks you're taking in order to support your consumers. But in general, actually, it's a much more recession-proof model than the traditional credit card model.
And Sebastian, within this higher inflationary environment, are there particular measures that you and the team at Klarna have been putting in place to mitigate the impact and potential buy now, pay later losses that might be coming through?
Well, as I said, we already in Jan took a little bit more cautious approach on. We have it's a small proportion of our business, about 5%, is kind of longer term installments that, durations are maybe 12 months or slightly longer. Then the majority of our business durations are only months. That's very, very short. And that also gives us a tremendous agility, right? If we change our underwriting model, I have changed the composition of my balance sheet in 2 months. More than half of it is under the new underwriting model. No bank has that level of agility, which is a very, very different aspect. So we have kept a close eye on the development. We've done some changes already in May as well to the model, and we're seeing already tremendous improvements. Is that we're going to report an improvement in losses already in these coming quarters. So feel very, that's very encouraging. At the same point of time, inflation is also to some degree a benefit for us, right? Because interest rates are rising, so the ability of interest-free credit is becoming even more attractive to consumers compared to credit cards that are now taking the advantage of the situation and increasing their rates on their cards.
But Sebastian, do you see, so that's for your funding, and it feels like things could be better in places than some of your competitors, maybe that are not now, shop now and pay later. Are consumers spending less? Do you see that in some of the revenue? So instead of buying 3 items, are they buying 2, and are those 2 items cheaper?
Yes, so that's definitely the case. So one thing we obviously seen, which we have to remember, which is a little bit, I think, to some degree why we're over punishing everything e-commerce related right now in the stock markets, we are still not comparing apples to apples, right? A year ago, COVID was still in force. And so that means that, people were still shopping more online. They definitely returned to stores. And I did see in August, you could really see people like, oh, finally, I can be in the store, I can be in the restaurants, et cetera, et cetera. Now, actually, you see e-commerce a little bit better. But again, we're comparing year on year. It's apples and bananas, right? Like last year was very different. With that said, obviously, yes, you're right. Like the average order value that we see of our 2 million transactions per day, which is across, the world today, is actually the exact same. So people spending the same amount, but they're obviously buying cheaper items. They're buying a different composition of items than they did back then. So you're totally right about that.
Sebastian, before we let you go, I do want to get your view on what we're seeing broadly across this tech sector. You mentioned earlier that you kind of lived and worked through this recession or previous recession. And as we look at the job cuts in other companies, whether it's Stripe with 7,000, Meta with above 10,000 job losses, and Twitter, you've gone through your own restructuring. How do you characterize this moment in technology? Is it a midlife crisis for the tech sector, or is it something else?
Well, yeah, I mean, it's fairly obvious that, a year ago, investors said, we don't really care about your profitability. We believe in the long-term opportunity, and now it's all about short-term profitability. In our case, I've had the advantage that Klarna was profitable for the first 14 years of existence, and only recently did we invest slightly more due to the fact that we wanted to establish ourselves in the U.S. market. So, but yes, it is obviously a change, and I actually think it's a fairly profound change. But I'm even more slightly concerned about what's happened with, FTX and the things that we've seen over there. It is, for people like myself who've been fairly critical of crypto for a while, it was fairly scary. A year ago, I didn't even bother to talk about it anymore because you would be attacked by people who love crypto so much it wasn't like even worth talking about it. Now it feels like, the emperor's clothes are, he is naked. I think people are starting to realize that, but what I'm worried about with it actually is more that now the incumbents, the traditional bank industry, will take this opportunity to again regulate this industry to the disadvantage of consumers, because we need more competition in banking industry. We need more. We need good consumer protection laws, but that doesn't stifle competition. And I'm a little bit concerned that these debacles that we've seen are again going to inhibit that and then continuously prolong the overly large profitabilities that we've seen in banking industry. They are not healthy for society and not for consumers.
Great, Sebastian, thank you so much. So Klarna Chief Executive Officer Sebastian Siemiatowski there. Now, we're also getting some breaking news out of China to let property developers access some pre-sale funds. We've seen overnight the Chinese economy going really through quite some lengths to support some sectors, including the property one. So overall, the picture is one that some of, I guess, equities around the world are lifted in the hope that China will become stronger and also more accessible. Coming up, Joe Biden arrives in Bali ahead of his meeting with China's Xi Jinping. We'll go live to Bali next to see what's at stake at the G20. This is Bloomberg.
There is an epic saying in Italy when it comes to family generations that the first generation creates, the second generation expands, and the third generation destroys. And that's almost what happened in the Gucci story.
So hate and love together. Now I would have a much more experience about those who says I love you and then betray you.
The Gucci family was the strength, but also the weakness of the label.
The situation became dire with Gucci's finances. They were not able to pay salaries. They were not able to pay suppliers. Gucci's really teetering on the brink at this stage.
Power, policy, politics. From the White House to the Hill, Bloomberg covers the leaders in legislation.
That was really a tectonic shift for this White House.
The theory of this bill, as I understand it, is there'll be a multiplier effect.
How did Democrats mobilize specifically younger voters?
Bringing you the political news you need to know.
The president has made it very clear that this is a significant focus.
For the intersection of Wall Street and Washington, nobody covers politics like Bloomberg. A multi-trillion-dollar industry. There's a lot of ground to cover.
Commodities got absolutely crushed.
We'll show you what's happening in ETFs like no one else. Bloomberg ETF IQ. Monday on Bloomberg.
Welcome back to the Open. Happy Monday, 24 minutes into European trading day. You're seeing green on the screen, up 0.4% for European equities on the back of some catalysts around China, the property sector. Futures in the US, though, just pointing off by about 0.1% on the S&P E-minis. Francine.
So, Tom, the Chinese president, Xi Jinping, has arrived in Bali, where he's scheduled to meet with Joe Biden a little bit later. The U.S. president landed in the Indonesian resort island on Sunday night ahead of the G20 summit this week. Now, the talks between Biden and Xi will be their first in-person meeting since the pandemic and their first since Biden took office. Now, for more on this, let's get straight to our Mark Champion. Mark, what does each leader need from the other?
Yeah, but it's actually a really interesting moment for both of them. You have Biden, who's just off unexpectedly good results in the midterms, so he'll be feeling a little more confident and a little stronger politically. Xi himself is off a Congress in which he established himself for the foreseeable future as the voice of Chinese leadership. And at the same time, they're both looking at a major geopolitical disaster in terms of the war between Russia and Ukraine. And really, I think what they will both be seeking to do, and certainly this is what Biden's people say he wants to do, is to put a floor under their own relationship, which is bad enough, the impact on the global economy that Russia has had. The war between Russia and Ukraine has had. But if you would have some sort of conflict developing between the US and China, it would be unimaginable. So both of them want to put a floor underneath the problems that they have in the relationship, and they have enough to do at home.
And intriguing to think about what the domestic picture in China, the challenges there, how that plays into the way that Xi Jinping comes in to this meeting. We know they've got this plan now around the property sector. They are now focusing on trying to shore up or at least undo some of the damage they put in place themselves around this sector and make sure that the economy is on a surer footing.
Yeah, I mean, for a while they were concerned to sort of deflate the bubble, and which they did very successfully. But it has become a danger to the economy. On top of that, they have the COVID-0 policy, which was also hitting the economy hard. Now they've got two plans, a 20-point plan for COVID, a 16-point plan for the property sector. So they're clearly trying to, again, put a floor underneath the problems in the economy.
Mark Chairman, great. Looking ahead to that all-important interview, or I should say meeting, summit between the two presidents, Xi Jinping and Joe Biden. Thank you. Coming up, still a ways to go, Chris Waller and the Fed, that view that there are more hikes in the pipeline. Stay with us. This is Bloomberg.
My grandfather got into the mutual fund business because the average investor could not get a diversified stock portfolio, and it was too dangerous to put, your entire savings in just a couple of companies. So the mutual fund was created to give a diversified expert management at a reasonable price. Today, we have a phenomenon where companies are waiting much longer to go public. And so in 2000, the average company went public after 3 years. Now, companies are waiting 9 to 10 years because there's so much money available in the private markets. As a matter of fact, there are half the number of public companies that there were in 2000, and there's 5 times the number of private equity-backed companies. So just from an investable universe, you look at the private markets, and it's significantly bigger. So the question is, that return that used to be captured in the public markets is now captured in the private markets. But the problem, as you know, is you're really tied up for a long time when you invest in a private equity fund. And so trying to figure out a way to solve the same problem my grandfather was trying to solve, which is how do you bring those returns responsibly, the democratization of the private markets to the retail investors? And I describe it as a bit of like running with scissors. Scissors is a great tool if you use it appropriately. And so we're focused on trying to figure out responsibly bringing it in to the average investor.
BSO Now is your online home for weekly Boston Symphony Orchestra and Boston Pops performances. See new concerts that go behind the scenes, plus acclaimed archival concerts. Visit bso.org/now, where the music plays on. BSO season sponsor, Bank of America.
Welcome back to the Open, everyone. 30 minutes into the European trading day, and here are your top stories. The bounce fades Asian stocks pair gains after China readies sweeping support for its ailing property market. U.S. futures slide after the Fed's Waller warns of more rate hikes. Misconduct probe FTX faces a criminal investigation in the Bahamas over the collapse of the crypto exchange, while Sam Bankman-Fried is said to have been interviewed by local authorities. Plus, superpower summit. Presidents Biden and Xi are set to meet for the first time as the two leaders look to ease tensions. Tom.
Yep, checking in on the markets here in Europe, then you're seeing gains of 0.3% across the benchmark. Here in the UK, the FTSE 100 up 38 points, trading at 7,356. The autumn statement on Thursday, CPI print as well out of the UK on Wednesday, and the OBR marking the homework of the Chancellor, all important for the markets. The DAX currently up 0.6%. We'll have a look at the sectors as well in the breakdown. I'm currently seeing 4 sectors currently in the red this morning. The catalyst of China and this 16-point plan around supporting the property sector. Currently in your sectors, top of the list is media, followed by chemicals, personal care, all up between 0.8 and a little over 1%. At the bottom of the list, you've got retail or real estate down at 0.9%. Travel and leisure also lower by 0.3. The context of the US dollar as well important. Currently seeing the Bloomberg dollar index up 0.2%. Last week, a drop of 3.5% for the US dollar, a catalyst in terms of the risk-on moves that we saw last week. That is starting to fade as a catalyst. Yields also up across the curve in the US. You could tie that to the comments from the Fed Governor, Chris Waller, pushing back on the idea that there's going to be a pause. A couple of individual corporates to bring it to your attention. Roche and the disappointment around an Alzheimer's treatment that could have generated, according to Jeffrey, sales of up to $6 billion every year. But the third phase trials came in disappointing. It was negative, so it doesn't look they're going to be moving forward with that particular treatment. The stock taking a hit on the back of that, down 4.4%. Glencore, we're linking this to the jump in particularly iron ore prices tied to that China story, 1.4% on the back of Glencore. That gain there, iron ore prices also up this morning. And S4 Capital, so Sir Merton Sorrell's advertising business, gaining, look, 5% after their gross profit came up 73% year on year. As we look at the advertising markets and softness there, this business seems to be, at least in some forms, weathering that storm. Francine.
Now, Federal Reserve Governor Christopher Waller said the Fed still has ways to go before they stop raising interest rates. Now, this echoes remarks from Fed Chair Jay Powell, who's also said rate increases are far from over. Joining us now is Sean Raitatata. He's macro strategist at Vanguard Asset Services. Sean, as always, thank you so much for joining us. The markets believe one thing, despite Fed officials saying something a little bit different. Is the market always right?
The market's not always right, and we know that. But it is clear that, following last week's CPI print especially, the pace of rate hikes from now on is likely to slow. And, we do expect that to slow down and step down from the 75 basis point hikes that we've had in the last few meetings. But it does make sense to keep going, right? And at Vanguard, our view is that the terminal rates will be at around 4.5 to 4.75%, probably reached at the beginning of next year in order to really get a handle on and handle on inflation. And clearly that's an issue, especially because services strength remains the dominant driver of stickiness in inflation next year.
And what is the Vanguard view, Sean, good morning, about whether the equity market can continue rallying as that terminal rate and the rate of hikes, of course, continues? That's the estimate. The terminal rate still coming in, as you say, up 4.7% potentially next year. Can the equity market continue to rally into that?
Well, we've seen already a lot of weakness in the equity market, right? And valuations, especially compared to the beginning of this year, have come down significantly, and that gives it more space, right? More margin of safety. That said, it'll probably take a bit longer for the equity market to really rally consistently relative to the bond market, because the bond market just needs to see a pivot with central banks and maybe that low growth environment dominating. But low growth and recession especially is particularly poor for corporate profits outlook, and therefore equities might struggle during that environment as well.
So, Sean, where do you see peak yields for the 10-year, for example?
Well, I mean, peak yields is obviously an interesting question, and it's clearly we're at a level now where a lot of bad news is already priced, a lot of hawkish news is already priced, but it feels like the balance of risks are now shifting. You have these recessionary fears coming into the horizon, and the key element to look at into 2023 will be what's happening with the labour market. Are we seeing labour market softness? That will then, if that does come into fruition, that will then have a downward impact on wages and particularly services inflation, which therefore will drive various asset prices, including long-term yields.
Sean, just in focus to the UK. So we have the inflation print out midweek here in the UK, and then we have that all-important autumn statement on Thursday. We've had a number of leaks, of course, over the last couple of weeks about what will be in that autumn statement. How has that informed you and the team at Vanguard's view on the depth and length of this recession that the UK faces?
Yeah, it's a great question, Tom, right? So we had the OBR report earlier this morning saying there's a big hole in the fiscal finances. Jeremy Hunt has to essentially plug a gap of between 55 and 70 billion pounds, around 2.5% of GDP. And that's going to be a function of tax rises and also spending cuts. And that is a tough message to sell. What I would say, though, is the impact, especially next year, in terms of the fiscal tightening on the economy, is likely to be relatively limited. That's because, the government are very aware that we're going into a recession, probably are in a recession already, and they're going to want to shield the economy from doing too much too soon. And so a lot of the measures will come in, at least, probably they'll wait until 2024 at least, and maybe even push it out to 2025, especially the public spending measures.
What's your take on house prices at the moment, Sean? I mean, I know we have one of the most read stories on the Bloomberg terminal is UK home sellers slashing asking prices after a lot of these mortgage rates really jumped significantly. Do we have a crisis, a housing crisis on our hands?
I wouldn't call it a crisis just yet, but clearly, the cost of living crisis that we're going through at the moment, the focus is going to shift from what has mainly been an energy story and arguably food story this year to one of higher interest rates, higher mortgage payments, and tighter financial conditions next year. And there's no getting around it. There's been a big repricing in mortgage rates, across the curve so far. And if you look at the stats, I mean, around 40% of total mortgage holders in the UK are going to have had to reprice to higher rates by the end of next year. That's a big statistic. It will then reduce spending power for a large number of households, and that will also intensify the cost of living crisis that we're in at the moment and also make the recession a bit longer. And so Vanguard's view is we're going to have a recession in the UK which probably lasts about 6 quarters as a base case to take you to the end of 2023.
A 6-quarter recession, and the BOE flagging potentially 8 quarters, depending on what goes into that, of course. Sean Raitata, thank you very much indeed. The analysis, the take on the UK economy as we look ahead to that autumn statement, of course, assessing those comments from the Fed's Chris Williams as well. Sean Raitata there from Vanguard. Coming up, we're going to speak with Michael Saunders, a former member of the Bank of England's Monetary Policy Committee. That exclusive interview later this morning. But coming up, we're going to speak with the chairman of the Energy Transition Coalition, Adair Turner, also former chairman of the UK Financial Services Authority. He joins us from COP27 next. This is Bloomberg.
more activity in the fusion world than ever, and not just in government research labs. There's also an emerging private fusion industry that's attracted billions of dollars in capital in recent years.
Governments and private investors alike realise that we've got to find a solution that's going to allow us to get to net zero targets.
This is one of the hardest but most rewarding problems that humanity could work on. Ultimately, we all want the same thing. We want someone to put electricity on the grid from a fusion power station as quickly as possible.
Frankly, the scale of the challenge, 3,000 gigawatts of fossil fuel to replace, there's not many things that can do that. In fact, there may only be fusion that can really do that.
And while many in the scientific community predict fusion power will take decades, some in the private fusion space believe we'll get there in just a few years, as soon as the 2030s.
You will shed light on dark matter. You will make aging optional. Because when you subscribe to Bloomberg, you won't just get news. You will get insight into limitless possibilities. Before you change the world, Bloomberg.
Welcome back to the Open, everyone. 40 minutes into the European trading day, we look at Fed officials and the fact that they actually believe that, well, some of them, most of them believe that there are more hikes to come despite the market thinking otherwise in the shorter term. And then the other story, of course, what's happening in China. For the moment, across the board, European stocks are actually gaining between 0.2 and 0.4%, Tom.
Yeah, we'll swing back to what's happening at COP27 then on the ground in Egypt. Behind the scenes, negotiators have been working on what is to be achieved still at this year's summit. Among the most important things are the rapid scale up of climate finance and ensuring that the world's emissions are finally put on a downward course. A lot of work on that front, of course. Let's bring in then someone who is on the ground for us in Sharm el-Sheikh and who is involved in these discussions this week. Adair Turner, Lord Adair Turner, Chairman of the Energy Transition Commission. Lord Turner, thank you for joining us. So this has been about the implementation at COP. What implementation have you seen or will we see as a result of these meetings?
Well, look, I think it's less clear here what the final statement will be than it was at Glasgow. At Glasgow, there was a lot of attention on bringing together net zero by 2050 or 60 commitments by 2030, what are called the nationally determined contribution commitments. We're less likely to see significant movement on that here. Instead, the focus is very much on these issues of what is generally called climate finance, though one has to be very careful of that term because it means several different things. But what is absolutely clear is that we need a way of mobilizing large flows of finance, in particular to lower and middle income developing countries where there isn't enough domestic savings and domestic capital markets and finance to drive the whole of this transition. And that was the focus of a report produced last week by Nick Stern and Vera Songwe. And I think the issue is, I think that will be turned into some sort of broad commitments and language at the end of the day. The crucial thing is to work out how to actually make it deliver. And the key issue there is, I think, the role of the multilateral development banks like the World Bank and other development banks of that nature.
But Lord Turner, so we're being told by many participants that actually the World Bank is not as aggressive as it could be. And there does seem to be a feeling that governments are putting energy security before energy transition. What does that mean longer term?
Well, look, I think if you were to look at Europe, I don't think you do see
energy security before energy transition. I think both in Europe and the UK, the response to the Ukraine war and the energy crisis has actually been quite a significant acceleration of policies which will help drive the energy transition. I think around the world, you're seeing a debate about it. We in the Energy Transition Commission, for instance, are doing some work on sub-Saharan Africa. There the big debate is, does sub-Saharan Africa need oil and gas, and how much to give the energy access and the growth of energy supply, which is undoubtedly needed for the people of sub-Saharan Africa? Or can you skip a generation broadly and go straightly to renewables? And actually, the key issue is the finance, and it is the cost of capital. If the cost of capital can be relatively low, then sub-Saharan Africa can develop both a clean energy and a much bigger energy system and a more secure energy system, primarily on the basis of renewables, with a subsidiary role for fossil fuels. But if the cost of capital is high, and there isn't that in international finance, they will gravitate towards fossil fuel development.
And the clock is obviously ticking. The United Nations says it's very unlikely going to hit that 1.5%. Lord Adair Turner, what is the private sector doing to speed up their commitments, and what do they need in terms of reassurance from the public sector, from government, to up their spending in those kind of jurisdictions you talked about?
Well, look, I think on the private sector, you've got to draw a distinction between, there are some sectors which use energy, steel, cement, chemicals, transport, where I am much more confident than I was 5 years ago about the pace of the transition and the strength of the targets. I mean, 5 years ago, we didn't have any major steel companies in the world saying they'll get to net zero by 2050, and now pretty much all of them are, and one of them, Tata Steel from India, is actually 2045, and they're really doing things. So in some of the energy use sectors, I see the private sector doing much more than it did 5 years ago, and here at Sharm el-Sheikh, I've met many people producing new innovations, new ways to power cement kilns, which, for instance, or to do chemical developments, which are coming much earlier than I anticipated. I think the big challenge does come back to this emerging markets challenge, where we are going to have to see this mobilization of capital, and that can partly come from the private sector. In some countries like India, a lot of it will come from domestically. India has a large savings rate. It has big, very competent, major global scale companies. But when you get to lower income groups, to Pakistan, to sub-Saharan Africa, a lot of it will have to come from a help from the public sector, and then the private sector will go in behind that.
Lord Turner, you've also been for many years, of course, one of the champions of UK business, of regulation. You're intrinsically linked to the UK economy. We have a big fiscal statement on Thursday. Do you feel, even in your dealings in Sharm el-Sheikh at COP27, that the UK has really taken a step back because of the turmoil of the last couple of months?
No, I don't think on our climate change. I frankly was worried about that under the Liz Truss premiership, but I think we've seen Rishi Sunak come here to a COP27. We've seen him reassert the commitment to aim to limit global warming to 1.5 degrees centigrade. We've seen the increases in the ambition in the North Sea, which occurred earlier this year, from 40 gigawatts to 50 gigawatts of offshore wind by 2030. So I am hopeful that the UK is still very clearly committed. I think the crucial missing bit, let's be clear, of UK climate change policy is not EVs. We'll go reasonably fast on that. It's not the development of the electricity system. It's residential homes. And I think probably the biggest worry is that under the fiscal tightness that we will have at the moment, and the limits which Rishi Sunak and Jeremy Hunt will be putting on public spending, we will get squeezed out the need for support to lower income families to insulate their homes and to install heat pumps. That has been for many years the missing bit of UK government policy on climate change and the energy transition, and it is one which requires some forms of public expenditure.
Adair Turner, thank you so much for joining us. The chairman, of course, of the Energy Transition Commission, joining us from COP27 in Sharm el-Sheikh. Now let's get straight to the Bloomberg First Word News with Laura Wright. Hi, Laura.
Hi, Francine. Russia and the US have failed to agree on language for a joint statement at the East Asia Summit in Cambodia. Russian Foreign Minister Sergei Lavrov blamed the US and its allies for what Moscow calls unacceptable language about Ukraine, which it refuses to describe as a war. The lack of agreement casts more doubt on consensus being reached at this week's G20 in Indonesia. China has issued a sweeping package of directives to rescue its property sector. Financial regulators are said to have published a 16-point plan which measures ranging from addressing developers' liquidity to loosening down payment requirements for home buyers. A Bloomberg intelligence gauge of Chinese builders' shares surged as much as 15%, taking this month's gain to more than 55%. An explosion in Istanbul's tourist district on Sunday has killed at least 6 people and wounded more than 80. Turkey's justice minister said it appears a bomb exploded in a bag left on a bench in the Taksim area. The attack, which officials suspect is terrorism, comes as Turkey prepares to hold elections next year. The Democrats have retained control of the U.S. Senate after voters rejected many of the candidates backed by former President Donald Trump. Senator Catherine Cortez Masto put Biden's party over the top after networks declared her the winner in a closely fought election in Nevada. Control of the House is still undecided, but Republicans have an edge with 211 seats of the 218 needed for a majority. France's power grid operator says the country will probably see a few days of rolling blackouts this winter because of a shortage of electricity. The chairman of RTE says to expect some days of electricity cuts to certain customers, but the fact that France is consuming less power provides some margin for error. Global news 24 hours a day on air and at Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. This is Bloomberg. Tom, Francis.
All right. Thank you very much indeed. Right, coming up, we're going to recap the latest on crypto after the collapse of the FTX exchange. A lot of news over the weekend. We'll get you up to speed. That is next. This is Bloomberg.
The Delhi airport, and behind me you can see SpiceJet 737 MAX aircraft. SpiceJet chairman Ajay Singh earlier today said that Boeing is going to compensate SpiceJet in form of cash and aircraft. Celebration happening at the Gwalior airport. As you can see, they've literally rolled down the red carpet for SpiceJet chairman Ajay Singh. There are balloons, there are flowers. This is a big deal for SpiceJet because it is the only Indian operator of Boeing 737 MAX planes currently.
From New York City,
from London, in Sydney,
from Washington,
in Tokyo.
9 a.m. in Beijing and Shanghai. Good morning, everyone. Have a great evening.
Here's what I'm watching. You do not want to miss this story.
How are you thinking about those dynamics?
Some
really a reminder, isn't it, just how sensitive the markets are to any commentary about trade. We did see some pressure on the yuan, we did see some pressure on the futures. That is now being reversed.
No one can protect a bad player, to be very frank. If a guy is very good at lying and is very good at just pretending to be what he's not, somebody wants to violate the law is not going to prevent that. The law can help to reduce that. As industry players, we should be more vocal about it. We should set very strong standards for the industry.
All right, not pulling his punches. Binance CEO CZ speaking in Bali there about the collapse of FTX. Let's recap what's happened then to FTX since Friday, and it's been a lot. When the company filed for Chapter 11 protection, police in the Bahamas say they're investigating whether there was any criminal misconduct in the collapse of the crypto exchange. Joining us now is Eva Sally. Eva, what are the latest developments and get us up to speed?
Absolutely. More and more details are emerging about FTX. We know, for example, that there was only 900 million of liquid assets against 9 billion of liabilities a day before the bankruptcy, which is a pretty significant liquidity hole. We are waiting for more details in the bankruptcy proceedings. There are more details likely to emerge, and there'll be a hearing in the next few days as well. There's a judge who has been assigned to the case, and so we are expecting to get a few more numbers and a little bit more detail on what's gone so badly wrong.
I mean, it's just such an incredible story, Eva, and I don't know whether it's confirmed, but there's rumor that Michael Lewis, one of the best writers and Bloomberg contributor, also had followed Sam for about 6 months. So what does this mean for crypto more broadly?
I mean, that's the big question. You know, I keep getting messages from people in the industry saying, we are so different from FTX. You know, we are not FTX. People are also bringing out that old chestnut about it's the technology, it's not Bitcoin. So there is a huge amount of nervousness in the industry because it feels like there's a huge existential crisis. Some of the points that SBF made in congressional hearings around transparency, and, you know, as a raison d'etre for Bitcoin, that it's more transparent than the current financial system, doesn't seem to have worked out quite as he said. And it's a very tricky position because people feel they need to justify the existence of crypto a lot more than this time last week.
Okay, so from the collapse of FTX to the challenges of Twitter, and Elon Musk saying that he's prepared to pay content creators, what, 10% more than those on YouTube? What are the details? Is this going to actually make an impact to the bottom line at Twitter?
That is the big question, whether it's going to make an impact on the bottom line. Can they actually tempt these influencers away? The question is whether these deals will be exclusive, because that's going to be tricky for influencers to swallow. You know, is it worth giving up millions of YouTube followers for 10% more of nothing or not much? You know, that's going to be a big question.
Eva, thank you very much indeed. Taking a look at what's happening, of course, with FTX. The fallout continues, and we will bring you the latest as we continue to monitor that story. And, of course, Twitter and Elon Musk's attempts to make some changes at that company to bring in some revenue. Francine Lacroix on the ground for us in Singapore. That is up for the European market open. Surveillance early edition is up next. Future stateside pointing lower by 0.2%. This is Bloomberg.
What do you think of when you think of a battery? For most, it's what we use to power devices for both work and play, and maybe even your car. Over the past few decades, they've gotten way more powerful, long-lasting, and affordable. But all of this is just a prologue to what the next batteries are going to do.
As we drive to an increasingly renewable power-driven grid, we also need to be able to store energy and release it later to cover those periods of weather intermittencies that are driving this new grid that we're in. It's a multi-trillion-dollar opportunity, and it's imperative that we figure out the solution here.
How we store energy on a massive scale is in many ways the central challenge of the fight to stop climate change.
Bloomberg is live at COP27 in Sharm el-Sheikh, Egypt. Bloomberg Television and Radio brings you continuing coverage as world leaders, business insiders, and decision makers gather to take action toward achieving the world's collective climate goals.
What are your top 3 priorities?
There is an ability always to find the new and innovative ways to meet the challenge and at the same time take into consideration the pressures that exist.
Special coverage continues only on Bloomberg, your global business authority. A multi-trillion-dollar industry. There's a lot of ground to cover.
Commodities got absolutely crushed.
We'll show you what's happening in ETFs like no one else. Bloomberg ETF IQ. Monday on Bloomberg. When U.S. jobs numbers are released, Bloomberg brings you crucial data at terminal speed and instant expert analysis. Nobody covers Jobs Day like Bloomberg. This is Bloomberg Surveillance, Early Edition, with Francine Lacqua.
Good morning, everyone, and welcome to Bloomberg Surveillance Early Edition. I'm Francine Lacqua here in Singapore. Here's what's coming up on today's program. Well, the bounce fades. Asian stocks pair gains after China readies sweeping support for its ailing property market. U.S. futures slide after the Fed's Waller warns of more rate hikes. Misconduct probe. FTX faces a criminal investigation in the Bahamas over the collapse of the crypto exchange. Sam Bankman-Fried is said to have been interviewed by local authorities. Plus, Superpower Summit. Presidents Biden and Xi are set to meet for the first time as the two leaders look to ease tensions. Well, good morning, everyone. Chinese stocks rallying after Beijing made fresh attempts to boost its ailing economy. Now, financial regulators issued a 16-point plan for the property sector on Friday, as well as measures recalibrating the COVID zero strategy. So for more on all of this, we're joined by Bloomberg's Sofia Ortega-Costa and Vivek Paul, Senior Portfolio Strategist at BlackRock Investment Institute. So thank you both for joining us. Sofia, first of all, huge kudos, because on Friday, Sofia does something on Twitter, which is a 10-point thread on the main China economic news. And today, what you have covered is trying to understand what they're doing for property.
Yes, exactly. And we just got, Francine, another breaking news on that front, which I think is important to mention. It's in addition to the 16-point plan that my colleagues had previously reported. And what happens is essentially China just allowed property developers to access a chunk of capital that's in escrow. And this is the kind of capital that property developers have when they sell homes but don't yet complete them. And this has been severely restricted for the greater part of 18 months. And it was also the reason that contributed to protests, the mortgage boycott earlier in the year. So this is a really big deal. The key question is, of course, will it work? In addition to the other measures that were previously reported, the key thing is, who wants to buy a home right now? Sentiment is incredibly low. Year-to-date sales have fallen almost 30%. We'll get more data on that tomorrow. So if it works, yes, I mean, on the supply side, it will be helpful. But on the demand side, there's still really weak sentiment. And it will take a lot to convince people to go out there and buy a home again.
So, Vivek, what's your take on this? What does it mean for how useful or concerning China can be to the rest of the world economy?
I think the big picture here for China, if you're an international investor, is trying to second guess what the authorities are doing is more difficult in an environment where effectively they're not just purely prioritizing economic growth. And I think that is the environment that we're in here. This has clearly been, over the last couple of years, a shift in terms of the broad policy, in terms of not just prioritizing pure economic growth, but more common prosperity. And I think as an international investor, trying to sort of see that for what it is means that you might have to associate a little bit of a higher risk premium when you're thinking about investing in Chinese assets. So clearly, in the near term, that is some positive news, as we've just heard from the correspondent. But I think the broader picture is, trying to second guess some of these movements is more tricky when it's not purely focused on economic growth.
So, Vivek, what you're telling me is that it could be volatile, that we could see a stop and start of the Chinese economy over a couple of quarters.
Well, I think the other news clearly from China that's been incrementally positive has been clearly the idea of the relaxation from the very sort of stringent zero-COVID policy. So I think clearly there are some reasons to kind of anticipate some element of a rebound. But I think for us, it doesn't really materially shift the bigger picture in terms of it was already factored in to our expectations of growth in the coming year. They will be more positive next year than it was this year. That won't be hard to do. But I think the bigger picture here is that there are still some material headwinds. So I think what we're seeing here, I think, are necessary but not necessarily sufficient conditions for a really strong rebound.
Sophia, can you talk us a little bit about what kind of Chinese growth we could be seeing? So one of the concerns, certainly when you speak to energy producers, is that if we have a full reopening and a strong economy in China, then it could shoot up the price of oil and therefore put everyone else in a recession.
Yeah, I do love that interplay between China and the rest of the world, because the concerns are so different depending on where you are. And look, Europe is China's biggest and most important trading partner. So what happens with Europe's economy is, of course, incredibly important. And the outlook there doesn't look particularly bright, Francine. Yes, I mean, China, when it comes to reopening, it will be gradual. It will be slow. It's not like it was in the UK, where suddenly you have, reopening day. That won't happen in China. It will happen incredibly a lot slower, and as Vivek said, I think it's very difficult to track that. So yes, well, when activity grows, China is the one place in the world that doesn't have an inflation problem. It actually has a producer price deflation problem, so that could correct somewhat. But inflation concerns are not quite there, because the consumer is still quite weak, and it was weak, Francine, even before the strictest COVID zero measures, the lockdown in Shanghai. It's been a long-term story. So, I think the balance between China and the world economy will be a very interesting story for next year.
Absolutely. And Vivek, the other stories, of course, yields in the U.S. are climbing after we heard from Christopher Waller of the Fed, and he pushed back on some of the dovish rate bets. How many hikes are you expecting from Fed in the coming months?
So we still see the peak in terms of the US somewhere in the order of 5%. And so that is our expectation. That hasn't materially shifted as a result of recent news. And I think it is worth putting this in context of what we've seen over the course of this summer up until this period now, right? We've had two, so this could be the third periods where effectively markets have tried to second guess what the Fed is about to do, second guess the idea of an imminent pivot in policy. And the last few times they've been disappointed. I think some of the noises that are coming out today suggest that, again, we need to be cautious of chasing that rally. And for us, this continues to be the bigger picture, is this idea that the Fed is going to over-tighten. They are going to take the economy into restrictive territory. That's the way in which they bring inflation down as quickly as they can, which is clearly what they're trying to aim to do. And that's why when you're thinking about asset allocation, when you're thinking about portfolio construction right now, we're still cautious with regards to risk assets, because we think the bigger picture hasn't changed. They are taking us into restrictive territory.
All right, brilliant. Thank you both for joining us. Sophia Orta-Acosta and Vivek Paul, their senior portfolio strategist at BlackRock. Now, coming up, Joe Biden arrives in Bali ahead of his meeting with China's Xi Jinping. We're live in Bali next to see what's at stake. This is Bloomberg.
digital-first approach to the future of work is where the industry and all companies will be heading.
Could the future of work not be at home or in the office, but in the metaverse instead?
There's that word, metaverse.
Doing well. How are you doing?
When I think about the metaverse, I think about immersive experiences that have a sense of active presence.
Wow, look at this. This is me. The metaverse is projected to become over $1 trillion market by the end of this decade. And whether you know it or not, you'll probably be working there in the future.
We're moving into a world where we're going to be interacting with computers with our bodies.
This is definitely trippy.
I think the adoption curve is going to be slow.
It's weird.
Like a weird floaty thing right now.
Oh, look at you. You have no legs.
It's kind of a fun world, and we're just at the very beginning of a very long journey.
The top names in climate change are on Bloomberg.
Building out local wind, local solar, hydrogen, these are solutions to not just climate issues, but geopolitical issues.
We are in a position by 2030 to have 80% of all electricity generated by wind.
Renewables are the safest, the cleanest, and the cheapest form of energy today, especially for countries such as Greece.
Nobody covers climate change like Bloomberg, your global business authority.
Also, not only to dry out the war chest of Russia, but it's also very important for many vulnerable countries to have an acceptable level of prices in the oil price.
Well, what do you think the price will be? Around $65?
This is not decided yet.
A range?
This is not decided yet, and therefore we're still in these discussions. But important is, and much more important is, to have all the necessary tools in place to really be able to go forward.
European Commission President then Ursula von der Leyen speaking about a Russia price cap on Russian oil at the G20 summit in Bali. She says everything is ready for it, but we still don't have a price. Now, U.S. President Joe Biden and China's Xi Jinping are also set to hold talks on the sidelines of that summit. Now, that's expected to be today. It'll be the first time that the two leaders have met face-to-face since Biden took office. Now, talks in Bali come after the U.S. president attended the ASEAN summit in Cambodia over the weekend. Now, for more on all of this, we're joined by Bloomberg's Anne-Marie Hordern in Bali. Anne-Marie, fresh off that wonderful interview with the president of the commission. So what are the deliverables if the Biden administration is hoping to get out of the meeting with Xi?
Good morning, Francine. Well, there really aren't any actual deliverables from this meeting, according to U.S. officials. What they're trying to do is just set a floor on the relationship between Beijing and Washington. As you said, this is the first meeting between these two leaders since the pandemic. It's the first time President Biden will be sitting down with Xi since he's been a leader. And what Jake Sullivan, the national security advisor for the president, said is that they want a stiff competition with China. That's what they want to relay to Xi Jinping, but they do not want a combative relationship. So really, this is just setting the floor after what's been a tumultuous few months as of late for this relationship. You think about what happened over the summer with Speaker Pelosi going over to Taiwan, and then you had Beijing really cutting off the United States on critical communications and discussions when it came to the U.S. military as well when it came to climate. So this is almost a reset, but don't expect a joint statement or any sort of deliverables on what the relationship, where it's going next.
And so, Anne-Marie, is there anything that China needs out of Biden? And actually, where does Biden stand when it comes to defending Taiwan should China attack?
It's a great question because we've seen the president on a number of occasions talk about the fact that the U.S. would go and defend Taiwan. There's four that really come to mind. The most recent is in a September interview the president gave to 60 Minutes when he was asked about this, and he said, yes, the United States would defend Taiwan in an unprecedented attack. He even went as far as to say that would mean U.S. men and women, something that he has not done when talking about defending Ukraine during Putin's invasion of Ukraine. So really, Taiwan is going to be the one topic that Xi Jinping is going to want to make sure, I imagine, he draws these red lines for the Biden administration, because this is something that has clearly drawn the ear of Beijing.
Anne-Marie, thanks so much. Anne-Marie Horder there with the very latest, of course, from the G20 in Bali, where she touched down a couple of hours ago and then got that great interview with the Commission President von der Leyen. Now, let's also bring in Bloomberg's editor-in-chief, John Micklethwaite, who's with me here in Singapore. Now, the reason we're here in Singapore is because we have a new economy forum. So, John, thank you so much for joining me. First of all, this is a forum really at the heart of what we're trying to figure out, which is where does China fit in all of this? Where are these new economies going forward?
I think that's right. I mean, the New Economy Forum originally sort of began in China, or began here, and then it went to China, and now it's come back. And it is a lot about the idea about what is the new economy, but also particularly the relationship between the West and the East, and the US and China at the center of that.
And so, I mean, we see this relationship really being throughout because of Russia, because of some of the planes over Taiwan.
I think if you look at the past month, it's possible we will all look back and say, well, actually, the most important thing that happened was not what's happened in Ukraine, important that is. It wasn't Rishi Sunak, important that is. It wasn't the midterms. It was actually two things. It was Xi consolidating power in that People's Congress, but it was also America declaring a kind of chip war on China. So the fact these two leaders are meeting now is immensely important.
Are we expecting some kind of truce?
That usually what happens, and strangely these meetings seem to almost exactly coincide with the New Economy Summit coming just before, is there tends to be a little bit of a truce, but then the hostilities begin again afterwards. And certainly in terms of what has happened over the past sort of 4 or 5 years, it's very hard to claim that things have got better.
Our New Economy Forum, I know, is kicking off with a great conversation that you'll have with Henry Kissinger. How does he see the world today?
Well, we'll find out, I suppose is the answer. But he does have the advantage as someone who understands history, who's seen it across many different sort of places, really, as well as, he has the advantage of being able to look back to what happened in Europe before the First World War. He has the advantage of also, here's a man who negotiated with Mao. There are very few of us who can claim they've done that. But I think the kind of interesting thing is that if you look at the previous versions of this forum, he talked about us being in the foothills of the Cold War. He then talked about us being in the high mountain passes. And the last time he talked about it being on the edge of a precipice. It'd be quite interesting to see where he goes geographically on that.
Yeah, me too. What we've lived through in the last 10 months is actually pretty extraordinary.
Yeah, I think there's been a definite divergence. And it's interesting. It's definitely true. You look at the numbers, US-China trade is absolutely high. But underneath it, every CEO you and I talk to, perhaps not on television, but at least privately, they're all preparing just-in-case scenarios. They're all looking at reshoring things close by. And that's why I think the chip thing is so important. America's effectively said, you're with us or against us when it comes to high tech. And that means that lots of companies are having to make decisions about where they are.
But so would you describe us in a new Cold War, and actually energy, chips, the economy is really our tools?
I think energy, you're right, is that energy, chips, all these, I mean, energy was part of the conflict with Russia,
one, yeah.
and also the current one as well. Energy is right at the middle of that. In this particular one, it does seem to be high tech as the main arena. And up to now, there's been something of a shadow war with Xi making various statements about China dominating parts of AI in America, sort of pushing back, the cyber warfare as well. And now with the chips, you have a much sort of clearer line of demarcation between the two countries.
So what are you expecting in the next 2 to 3 quarters? And I know we talk extensively also about the UK. It does seem to be a lot more stable, certainly, than it was in the last 2 months, although that's not very hard. What are the fault lines that you're looking for?
It's very good when the UK is used as a barometer for instability. No, I think in general, I mean, I do actually think this relationship at the core of all geopolitics, and it's amazingly noticeable. You sit on Wall Street, you talk to people, and they will waffle a little bit about US-China. They'll waffle a little bit about issues like Taiwan. Here, when you meet business people, you meet investors, it's absolutely at the front of their mind. And that's because this is, in a sense, Singapore, Indonesia, Malaysia, this is a sort of version of a front line in that. It's places where people feel both the pull of China economically, but they also feel the pull of America and the West in terms of values and things like that. And one of the great difficulties in which Joe Biden seems unable to find a way around is when America comes to this region, it never offers the thing that this region most wants, which is some kind of free trade or some kind of economic pact. It just talks a lot about values. And that, at the moment, is the thing which is missing from the American side.
But is that because his hands were tied because
Yes,
of Trump's
it's not-
presidency that realigned the supply chains?
I think it's more that, to be frank, I mean, it's more because Biden's arms are tied by the Democratic Party on this. If you have a Democratic Party which has trade unions to the fore, and Joe Biden is not a secret. He gives into that a lot. But that, from the point of view of a geostrategy, is definitely holding America back, because when America's envoys come here, they meet a group of countries that want to have some kind of alliance with America, but they want an economic alliance, and that seems something that America is unwilling to give.
Will that change because he came out quite strong in the midterms, Joe Biden himself?
I think you'd hope that some part of Joe Biden would think, this is my, I want to... He has defined a conflict in some ways with the chip declaration. That is a very clear, as I said before, you're with us or against us. Well, I think you've got to give the people who are with you something. And one of the beauties of trade as an organizing principle for that is it's something you can offer to everybody if they open up their markets. And it gives you a much broader thing. Otherwise, you're forced back on people who are merely really scared of China, which it tends to be Japan, Australia, India a bit. But it does open up a new possibility of a balance of power.
So outside Henry Kissinger, who are you most who are you most looking forward to hearing from?
I think I'd be very interested to see people that have TikTok we've got coming to speak. We've got a lot of the individual leaders of different bits, finances, people like Ken Griffin. You've got a lot of people from different walks of life and how they look at this prism, what they see coming out of Asia. I think those sort of people would be really interesting.
I mean, TikTok, is it soft power that China's exporting, or is it really a business model?
That's a very good question. And I no doubt he'll try and answer that. But I think that it's not just, it is soft power, but you're also seeing pushback, quite strong pushback from the Justice Department in America. You're seeing also difficulties to do with, TikTok, you have two things. You have a fantastic, innovative business model, but then there's a question about how much what's used with the data and all those sort of things. And that is where, again, business and geopolitics begin to collide.
Okay, I could bet you that maybe our John Micklethwaite does not, or does have a TikTok account. Not yet. Soon open TikTok account with our Bloomberg News editor-in-chief, John Micklethwaite. It's just waiting to happen. Coming up, the UK Chancellor signals he will delay some of his tax cuts and, of course, shore up support for the government. Stay with us for more on that story. That's coming up next, and this is Bloomberg.
There is an epic saying in Italy when it comes to family generations that the first generation creates, the second generation expands, and the third generation destroys. And that's almost what happened in the Gucci story.
So hate and love together.
Now I would have a much more experience about those who says I love you and then betray you.
The Gucci family was the strength, but also the weakness of the label.
The situation became dire with Gucci's finances. They were not able to pay salaries. They were not able to pay suppliers. Gucci's really teetering on the brink at this stage.
Bloomberg has enhanced search on the terminal to deliver what you need when you need it. Now, you can simply type phrases in everyday English in the command line. Compare financials. Find people. Analyze markets. You can enter phrases or ask questions. What do you want to know today? Ask a question or visit SearchGo to find answers now.
BSO Now is your online home for weekly Boston Symphony Orchestra and Boston Pops performances. See new concerts that go behind the scenes, plus acclaimed archival concerts. Visit bso.org/now, where the music plays on. BSO season sponsor, Bank of America.
Economics, finance, politics. This is Bloomberg Surveillance, early edition. I'm Francine Lacqua here in Singapore. Now let's get straight to the Bloomberg First Word News. Here's Laura Wright. Hi, Laura.
Hi, Francine. China has issued a sweeping package of directives to rescue its property sector. Financial regulators are said to have published a 16-point plan with measures ranging from addressing developers' liquidity to loosening down payment requirements for home buyers. A Bloomberg intelligence gauge of Chinese builders' shares surged as much as 15%, taking this month's gain to more than 55%. The Democrats have retained control of the U.S. Senate after voters rejected many of the candidates backed by former President Donald Trump. Senator Catherine Cortez Masto put Biden's party over the top after networks declared her the winner in a closely fought election in Nevada. Control of the House is still undecided, but Republicans have an edge with 211 seats of the 218 needed for a majority. France's power grid operator says the country will probably see a few days of rolling blackouts this winter because of a shortage of electricity. The chairman of RTE says certain customers can expect days of power cuts, but the fact that France is consuming less energy provides some margin for error. An explosion in Istanbul's tourist district on Sunday has killed at least 6 people and wounded more than 80. Turkey's justice minister says it appears a bomb exploded in a bag left on a bench in the Taksim area. The attack, which officials suspect is terrorism, comes as Turkey prepares to hold elections next year. Global news 24 hours a day on air and at Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. This is Bloomberg. Francine.
Thank you so much, Laura. Now, coming up, the UK Chancellor signals Thursday's autumn statement may backload spending cuts and tax rises until after the next election. We'll have plenty more on that story next, and this is Bloomberg.
More activity in the fusion world than ever, and not just in government research labs. There's also an emerging private fusion industry that's attracted billions of dollars in capital in recent years.
Governments and private investors alike realise that we've got to find a solution that's going to allow us to get to net zero targets.
This is one of the hardest but most rewarding problems that humanity could work on. Ultimately, we all want the same thing. We want someone to put electricity on the grid from a fusion power station as quickly as possible.
Frankly, the scale of the challenge, 3,000 gigawatts of fossil fuel to replace, there's not many things that can do that. In fact, there may only be fusion that can really do that.
And while many in the scientific community predict fusion power will take decades, some in the private fusion space believe we'll get there in just a few years, as soon as the 2030s.
No one covers the world like Bloomberg.
The writings on the wall for the Bank of England, Just Stop Oil, has spray painted the front door.
Recession in Europe, UK, and possibly the US.
Brazilians are out in full force celebrating the election victory of former President Lula da Silva.
With unmatched reach and resources from more than 120 countries, the moment news breaks, 24 hours a day. Bloomberg, your global business authority.
You will shed light on dark matter. You will make aging optional. Because when you subscribe to Bloomberg, you won't just get news. You will get insight into limitless possibilities. Before you change the world, Bloomberg.
The bounce fades. Asian stocks pair gains after China readies sweeping support for its ailing property market. U.S. futures slide after the Fed's Waller warns of more rate hikes. Misconduct probe FTX faces a criminal investigation to the Bahamas over the collapse of the crypto exchange, while Sam Bankman-Fried is said to have been interviewed by local authorities. Plus, superpower summit, Presidents Biden and Xi are set to meet for the first time as the two leaders look to ease tensions. Well, good morning, everyone, and welcome to Bloomberg Surveillance Early Edition. I'm Francine Lacqua here in Singapore. Now, we're just getting some breaking news out of the Russian Foreign Secretary. He's Mr. Lavrov. Again, some reports that actually have been denied by the Russian ministry. Now, we understand from the Associated Press, that's actually quoting Indonesian officials, the Russian Foreign Minister, Sergei Lavrov, was taken to hospital after arriving for the G20 summit in Bali. Now, a couple of minutes before that news line broke on the Bloomberg terminal, the Russian Foreign Ministry actually denied his hospitalization. So we have a big team on the ground. We'll try and get to the bottom of exactly what's going on. And of course, we'll bring you anything that comes out of that. The hospital, who we tried to reach for comment, has not immediately responded. Separately, we also know that Joe Biden has arrived at the Bali hotel for his meeting with the Chinese President Xi, the first time since Joe Biden took office. Now, the UK Chancellor Jeremy Hunt is due to unveil measures to bring the national debt under control in his autumn statement on Thursday. However, signaling from the government over the weekend also suggests that Hunt delay much of his planned £55 billion of tax rises and spending cuts.
We are going to see everyone paying more tax. We're going to see spending cuts. But I think it's very important to say that we are a resilient country.
Well, for more, we're joined by Bloomberg's Lizzie Burden with Michael Saunders. Hi, Lizzie, over to you.
Hi, Francine. Thank you. And we are joined by Michael Saunders. It is his first day as senior advisor to Oxford Economics. It's his first on-air interview since leaving the Bank of England's Monetary Policy Committee. Thank you, Michael, for joining me. You joined the Monetary Policy Committee just after the Brexit referendum in 2016. Now it's Saunders Unleashed. You can finally speak freely about politics. How would you characterise the past 6 years of government?
Well, it's been a chaotic period, hasn't it? We've had 5 prime ministers, 7 chancellors. I think I apologise if I've missed out 1 or 2 of them. And also in economic terms, it's been a challenging period with the Brexit vote, the depreciation of sterling, a long period of political uncertainty, the pandemic, and then renewed political uncertainty. And I think perhaps the main legacy of that period is that the economy's potential output, what it can produce without generating inflation, has been weak. Indeed, the Bank of England's monetary policy report that came out recently implies that the economy's potential output has fallen outright since the end of 2019 and will grow by less than 1% per year in the next few years. And that implies low growth of living standards and constant battle over whether to raise taxes or to cut public spending. And I think getting higher potential growth is really the big economic challenge of the next few years.
Well, you mentioned Brexit. London's lost its crown to Paris as the biggest stock market in Europe. Is the City of London permanently damaged by Brexit?
You know, I would cast the net wider than that. The UK economy as a whole has been permanently damaged by Brexit. It's reduced the economy's potential output significantly, eroded business investment. I mean, look, if we hadn't had Brexit, we probably wouldn't be talking about an austerity budget this week. The need for tax rises, spending cuts wouldn't be there if Brexit hadn't reduced the economy's potential output so much.
Does the government need to be more open about that?
Well, I think for the country as a whole, this question of how we raise potential output, that really is the thing, I think, which is going to be the big challenge. I mean, look, if I have to say, Liz Truss, in her brief failed premiership, got that 1 point right, that raising potential output is the big challenge. I think her diagnosis of the problem and her suggested solution to cut taxes and to deregulate are wrong. I would put the emphasis more on improving trade links with the EU, improving education, training, and also fixing this worrying rise in long-term sickness, which has been reducing the workforce so much.
And in the fiscal statement on Thursday, is there a danger that the Chancellor, Jeremy Hunt, overcompensates in his attempts to plug the fiscal gap?
Well, I think the challenge for Hunt this week is to try to close the fiscal gap without further damaging the economy. It's clear from the business surveys that the economy is in a tough place. Probably got shrinking GDP in Q4 after a drop already in Q3, so you don't want to make that worse. So I have to say, the kind of things that I would look for if I was him would be to do measures which don't damage the economy so much. So perhaps introducing a tiered system of interest rates on banks' reserves, reducing tax relief for top-rate taxpayers on pension contributions, closing some of the loopholes on non-doms, reducing the dividend tax allowance. These kind of measures would probably have a less adverse immediate effect on the economy than raising the headline tax rates or cutting the main departmental public spending.
And we've also got inflation in double digits in the UK. Has the bank failed in its duty to fight inflation? You, of course, were the hawk of the committee.
Look, I do think it's useful to look back at policy decisions and forecasts from previously. I have to say, I think it's wrong to over-personalise it and to put it in terms of this person was right and that person was wrong. It's more important to try to learn the lessons from that period. And the big surprise, compared to the Bank of England's forecast from a year ago, is that the economy's supply side, its potential output, has been weaker. Productivity growth has been soft. The workforce has been lower than expected. As I said, much of that is due to long-term sickness. And you've got to try to incorporate the lessons from those economic surprises into your current policy assessment and to your forecast.
So how much further do rates need to rise?
I think they've still got some way to go. I would be cautious about saying exactly how much, but I think they probably have some further to go. And that's really to make sure that we don't end up with a lasting inflation problem. Remember, the inflation we've got is largely the result of Russia's invasion of Ukraine, which has boosted energy prices. But there's also a substantial part of it which is domestic, homegrown. And we've got to make sure that that doesn't persist, so that even once the energy effect fades, which it will do eventually, we get inflation back to the 2% target.
And of course, you'd left the Monetary Policy Committee by the time of the Truss mini-budget, but had you still been on the committee, would you have felt sidelined by the way the emergency bond buying was carried out?
Look, I understand why the Bank of England judged that they needed to act so quickly. There's a crisis caused by the interplay of that mini-budget, the LDI investors, and emergency measures were needed in a short number of hours. But I do think we need to establish the governance around a policy in which QE, previously a monetary policy tool, is also going to be used for financial stability purposes. What are the criteria under which it should be used for financial stability reasons? Who makes the decisions? And what's the governance over that? And to whom are those decisions accountable? The decisions to launch that program, which as I said, I can understand why they did it, were made by the bank's executive. And I think we need a clearer governance over those decisions and a clearer line of accountability. The MPC, for example, is accountable to Parliament through the Treasury Select Committee for its monetary policy decisions. Maybe we need to think about something similar for the bank's executive if it's going to make QE decisions for financial stability purposes.
A question perhaps for the new Treasury Select Committee Chair. Thank you so much, Michael Saunders, now Senior Advisor at Oxford Economics. Back to you, Francine.
Lizzie, thank you so much. We're also seeing live pictures, the exciting moment of the day of Joe Biden and President Xi. That meeting about to get underway. I think we saw briefly pictures of the two leaders actually shaking hands. Now, they've tempered expectation, really, for the sit-down. Tensions very high, not only on U.S. curbs on chip exports to China, but also on the status of Taiwan. Coming up, Ursula von der Leyen says the EU is ready to go with an effort to impose a price cap on Russian oil. We'll have plenty more from our interview with her from the G20 in Bali as well. That's coming up next, and this is Bloomberg.
What do you think of when you think of a battery? For most, it's what we use to power devices for both work and play, and maybe even your car. Over the past few decades, they've gotten way more powerful, long-lasting, and affordable. But all of this is just a prologue to what the next batteries are going to do.
As we drive to an increasingly renewable power-driven grid, we also need to be able to store energy and release it later to cover those periods of weather intermittencies that are driving this new grid that we're in. It's a multi-trillion-dollar opportunity, and it's imperative that we figure out the solution here.
How we store energy on a massive scale is in many ways the central challenge of the fight to stop climate change.
Power, policy, politics. From the White House to the Hill, Bloomberg covers the leaders in legislation.
That was really a tectonic shift for this White House.
The theory of this bill, as I understand it, is there'll be a multiplier effect. How did Democrats mobilize specifically younger voters?
Bringing you the political news you need to know.
The president has made it very clear that this is a significant focus.
For the intersection of Wall Street and Washington, nobody covers politics like Bloomberg.
Economics, finance, politics. This is Bloomberg Surveillance, early edition of Francine Lacqua here in Singapore. Now, we're just getting some breaking news. Of course, the meeting between President Xi and President Biden has begun. Just a couple of seconds ago, we're seeing both leaders shaking hands, and then they went into a hotel. Now, what will be discussed will be a number of things. We know that officials from both countries have tried to temper expectations for the sit-down, with tensions high over U.S. curbs and on chip exports to China, but also on the status of Taiwan. Now, we're looking at live pictures, I believe, of President Xi and President Biden. The other thing that's going on, of course, in Bali is we understand the Russian Foreign Ministry denied a report by the Associated Press that was then confirmed by Indonesian officials that the foreign minister, Sergei Lavrov, had been taken to the hospital. Now, a reminder, I know we all know this, but maybe some of you may not. Lavrov arrived in Bali on Sunday to represent President Putin, who is not attending in person. Now, you see live pictures there of President Biden flanked by the Treasury Secretary Janet Yellen, and then to his right is Antony Blinken, of course, the Secretary of State. Many questions not only on what happens with Taiwan, but also this is the first in-person conversation between the leaders of the world's biggest economies since the pandemic emerged. So let's get straight to our Mark Champion, who's been covering everything about the G20, who's been covering extensively the war in Ukraine and how President Biden also needs President Xi on his side. Mark, we're looking at live pictures. I mean, it is such a historical moment. The first time since President Biden became president that these two are meeting. We know that they know each other quite well from the past. Is the war in Ukraine going to overwhelm the summit?
Yes, I think, that if there is something that comes out of this summit, it is really going to be from this meeting. And it may be not a big positive that they can come out with. It's more about just trying to agree that and draw sort of lines underneath a relationship that is extremely tense on a number of areas, but that neither of them wants to see spiral out of control. And if they can do something to achieve that, then that's already a real win, if you like. The summit itself, that's going to be tough. You have essentially, as important a moment as after the, global financial crisis in terms of what's going on in the global economy with, commodities and recessions really hitting, energy crises and so on. But it's going to be very, very difficult for the G20 to pull together in the same way, just because the causes are in part geopolitical and to do with the Russian war in Ukraine.
Mark, just going back to this meeting with President Biden, we're looking still at live pictures from this hotel where the Biden administration, or parts of the Biden administration, are meeting with the Xi administration. There are tensions over tech, trade, and human rights. What needs to happen for this summit on the sideline of the G20? How does it need to go for it to be a success?
Essentially, they need to agree to just put a floor underneath those tensions and to come to some kind of agreement on, where their red lines are and how they're going to be respected, how they're going to make sure. They're not going to agree about Taiwan. They're not going to agree, Xi is highly unlikely to suddenly say, okay, you're right about Russia and Ukraine, we'll back you. It's not going to happen. But what they may be able to do is to try and make sure that the kind of spiraling that happened and ended up with the war in Ukraine, isn't going to happen over Taiwan, for example, at least not anytime soon, and that they can really just sort of, agree on where their red lines are and how they're going to avoid crossing them.
Yeah, I mean, we're looking at these live pictures. Again, a very historic moment. We're sorry. We apologize for the shaky camera work. I don't think they brought a tripod, but it's not a Bloomberg camera. Mark, the other, I guess, intrigue is that Russia has now denied that Mr. Lavrov was taken to hospital in Bali after the reports were actually confirmed by Indonesian officials. Like, what do we know about this?
We don't know a great deal. That's about it. Lavrov obviously is here in substitution for President Putin himself. He's an incredibly experienced diplomat, other diplomats who dealt with him over the years talked with him about him as, extremely skillful, but really a sledgehammer. So if he is not, for whatever reason, going to be able to take part, that will also play some kind of role.
Thank you so much, our Mark Champion there, of course, covering the war in Ukraine and some of these foreign policy changes over the years. Now, we're also joined by Bloomberg's Anne-Marie Hordern in Bali, who's been traveling with the president. Anne-Marie, we're hearing there from President Biden say China and the U.S. should play key roles addressing challenges. Also an overture from the U.S. saying we are ready to work with you if that's what you desire. Tell us more about what's expected in the meeting.
Well, the U.S. really wants to put a floor on this relationship, and even the fact that they were building up to setting this meeting, we've learned from the U.S. officials that really started to also ease some of the tensions. At least they started to communicate, because remember, Francine, the relationship really deteriorated over the summer when you had Speaker Pelosi heading over to Taiwan, when you had from Beijing was then pulling the rug off of the United States when it comes to crucial talks regarding the military as well as climate talks. The United States really just wants to not just set a floor, but also the guardrails and how they do business on a number of priorities the U.S. has with China. Of course, there's a tension over Putin's invasion of Ukraine, and we know that Putin and China earlier this year during the Beijing Olympics discussed this no-limits friendship. There's also the fact when it comes to Taiwan. This is going to be probably the most contentious issue as these two individuals sit down. For Xi Jinping, this is really a red line. He's talked about the reunification of Taiwan with China. He's now surrounded himself with nationalists after his People's Party conference. And then you have the President of the United States on a number of occasions throughout his presidency saying that the U.S. would defend Taiwan. So these are some of the issues that are likely going to be taking place, but there are no set deliverables. It's really just face-to-face conversation.
And Marie, we're still looking at those pictures, of course, between the two sides. President Xi saying we need to chart a right course for China and the U.S. relationship. Does this actually just boil down to who becomes the most powerful superpower in the world? And this, of course, is on the back of President Xi also securing this norm-breaking third term.
There's no doubt that both these individuals are going to this meeting also feeling a little bit more comfortable with their positions. You mentioned Xi Jinping's unprecedented third term, but also the President of the United States yesterday speaking in Cambodia to reporters, talking about the fact that he is in a stronger position now, that the U.S. was in the midterm elections have shown that the Democrats now have maintained that control of the Senate with the fact that Nevada stayed blue. So the President of the United States is going in without this red wave that was supposed to be in the U.S., with likely some more momentum and power behind him and his administration. But when it comes to who is going to really lead the world, this is what the United States is so carefully trying to craft with their allies. They spoke to the likes of the leaders of Japan, South Korea, Australia, going into this meeting with China to make sure they are taking what they've said also when they documented how they want to approach China, a multilateral approach, that it also works with their allies. Something you really see the U.S. talking about a lot as well as the Europeans, is diversifying supply chains. They no longer want to make sure that they are ever reliant on one country, and of course, China really is ground zero for the start of many supply chains.
The two, we understand, the two leaders, I think, Anne-Marie, have spoken some 5 times since Biden took office. Can China help more with North Korea than it can with Russia?
It's a great question. I think at this moment, China is in a position to really straddle both of these issues. When it comes to Ukraine, we saw in Uzbekistan when Xi Jinping met with Putin, Putin said, we know you have some questions about what is going on. And then recently when Olaf Scholz, the Chancellor of Germany, went to China, we heard China talk about the fact that they do not like the idea and they do not want to see nuclear missiles and any sort of nuclear weapons being used on the European continent. This is one reason when it comes to North Korea, China could potentially be that backstop. And this is why you saw the president over the weekend, according to officials, really want to engage in the likes of the leaders of Japan and South Korea, because they will need China's help in terms of making sure that North Korea, which we've seen over the past year become even more rambunctious, if you wish, or adventurous when it comes to missile tests. They want to try to be able to make sure they can keep North Korea in check. And Xi Jinping is one individual that can help with that.
Anne-Marie, thanks so much. Bloomberg's Anne-Marie Horder there with the very latest, of course, from Bali at the G20. More coming up, and this is Bloomberg.
a digital-first approach to the future of work is where the industry and all companies will be heading.
Could the future of work not be at home or in the office, but in the metaverse instead?
There's that word, metaverse.
Doing well. How are you doing?
When I think about the metaverse, I think about immersive experiences that have a sense of active presence.
Wow, look at this. This is me. The metaverse is projected to become over $1 trillion market by the end of this decade. And whether you know it or not, you'll probably be working there in the future.
We're moving into a world where we're going to be interacting with computers with our bodies.
This is definitely trippy.
I think the adoption curve is going to be slow.
It's weird.
Like a weird floaty thing right now.
Oh, look at you. You have no legs.
It's kind of a fun world, and we're just at the very beginning of a very long journey.
Why do the biggest names in business choose Bloomberg?
That is a great question.
It's a great question.
Great question. Great question. Best question I get all night.
Bloomberg, top experts, great questions.
So we count on having the oil price cap around till the end of the year. We've set all the tools necessary in place in the European Union. We're basically ready to go. Now, indeed, there are the discussions on the how it has to be. It is very important also not only to dry out the war chest of Russia, but it's also very important for many vulnerable countries to have an acceptable level of prices in the oil price.
But what do you think the price will be? Around $65?
This is not decided yet.
A range?
This is not decided yet, and therefore we're still in these discussions. But important is, and much more important is, to have all the necessary tools in place to really be able to go forward.
Will there be a grace period up until the early next year?
Listen, I think we should wait till it is in place, then the details are sorted out.
It's coming up soon.
And the moment it is in place, then we can discuss all the different details.
I want to ask you just two more questions. One again on Russia. President Putin is not here. We have already saw in other summits communiques not get signed because of the language that cannot be agreed upon between most nations and Russia. Do you expect a communique out of this G20?
Absolutely, this should be the goal, because all the countries that are here are working hard to have a common communique. And I wish that President Putin would have been here so that we could have the discussion face to face and could have said what we think of this atrocious war. But it is important. There are so many important issues. It is the whole debt issue, for example, for the vulnerable countries, so important. It's the food crisis, knock-on effects of Russia's war. It is the energy crisis. It is the health topics. So important topics, and we should find a common communique. It's very good that Indonesia has a strong leadership. We're working on it.
The European Commission President, Ursula von der Leyen, there speaking on the sidelines of the G20 summit to our Anne-Marie Hordern. President Xi and President Biden meeting right now. Bloomberg Surveillance Early Edition continues in the next hour. This is Bloomberg.
been an advisor to the President of the United States on infrastructure and manufacturing, but on infrastructure, you've been involved with the legislation that was passed not long ago. Why is the United States infrastructure so terrible compared to so many other wealthy countries?
I have been around U.S. politics like you for a couple of decades and have served a variety of presidents from the different parties. And the attitude in the United States is obviously to keep taxes low and keep the public spend under control. And the word control is interesting, but that stops forward thinking in terms of planning. And therefore, the short-termism around our fiscal policies has hurt us. I mean, in essence, infrastructure is a long-term return. And to get a long-term return, putting it into private hands is one way of doing it. But really, the public side of life has to be willing to do the forward spend. The forward spend on airports and roads and EV charging stations has to come from the public domain. Now, raising taxes to spend money on infrastructure means you've got to trust the people doing the spending. And I think the public-private model is the way to go there, which is actually create an infrastructure bank that is U.S. public sector owned that has private sector matching funds. I think that sort of breakthrough has yet to occur in the United States. So where we go is tax and spend, which unfortunately one side of the aisle disagrees with.
Bloomberg is live at COP27 in Sharm el-Sheikh, Egypt. Bloomberg Television and Radio brings you continuing coverage as world leaders, business insiders, and decision makers gather to take action toward achieving the world's collective climate goals.
What are your top 3 priorities?
There is an ability always to find the new and innovative ways to meet the challenge and at the same time take into consideration the pressures that exist.
Special coverage continues only on Bloomberg, your global business authority.
From New York City,
from London, in Sydney,
from Washington,
in Tokyo,
9 a.m. in Beijing and Shanghai.
Good morning, everyone.
Have a great evening.
Here's what I'm watching.
You do not want to miss this
How
story.
How are you thinking about those dynamics?
This is the worst period in the U.S.-China relationship in decades, and this is a chance for both leaders to express how they want to course-correct the relationship.
There are differences and there are issues to be discussed, and therefore it's good that in G20 there is the possibility.
I know I'm coming in stronger, but I don't need that. I know Xi Jinping. I spent more time with any other world leader. I know him well. He knows me. There's no, we have very little misunderstanding.
This is Bloomberg Surveillance, Early Edition, with Anna Edwards, Matt Miller, and Kaylee Lines.
It's 10 a.m. in London, 5 a.m. in New York, and 6 p.m. in Hong Kong. Our top stories today. High-stakes summit in Indonesia. President Biden tries to keep relations with China from getting any worse in his first in-person presidential meeting with Xi Jinping. Crypto crisis. Authorities in the Bahamas investigate potential criminal misconduct at FTX. And Binance proposes a recovery fund for the industry. And the Fed's not done yet. Fed Governor Christopher Waller says there's a ways to go before the central bank is finished raising interest rates. Welcome to Bloomberg Surveillance Early Edition. I'm Anna Edwards in London with Matt Miller and Kaylee Lines in New York. And Kaylee, we've seen Xi and Biden. They've met in Bali. They've even shaken hands, a few warm words before the serious business of that conversation gets underway. So the meeting taking place, a lot of focus on geopolitics this week.
Yeah, especially when it comes to the relationship between the two largest economies in the world. So that definitely is something that markets globally are looking at, and Chinese markets especially, as they weigh any kind of geopolitical risk there. But more optimism coming through in China from what's happening domestically, with pledges to shore up support for the ailing property sector. That in part is what was lifting Chinese and Hong Kong markets higher overnight, even though Japan was lower, which led the MSCI Asia Pacific Index overall down about 0.25%. But we saw massive moves for some of those property development stocks in China. A Bloomberg Intelligence gauge of those stocks up 14% overnight, adding on to a gain of 17.5% from Friday. That index now up 55% in the month of November so far. And remember, it's only the 14th. Now, part of that plan just is liquidity assistance, easing up of some restrictions, including a new announcement today that developers may be able able to access more pre-sale funding. So basically what is held in escrow, all of that aimed at shoring up support for the property sector and the Chinese economy as a whole. And that in turn is lifting the Chinese yuan, strengthening against the dollar to the 705 levels. So we're around the strongest level on the offshore yuan in about 2 months. And of course, more positive sentiment in the property sector indicates demand may be a bit better for iron ore. So that lifting those futures nearly 3% in Singapore overnight. We're back up to just shy of $94 a ton, Matt.
All right, so, but those dollars are worth less and less. I'm looking at the Bloomberg Dollar Index, and I'll focus on that in a moment. S&P futures down about 0.5% right now, but after a real rally, last week we were up 6%, right? We almost closed at a 4,000 level on the S&P. I think we're 39.92 or something like that in the cash trade. So we're letting a little bit of steam out today, or at least in futures. We still have 4.5 hours to go. The Bloomberg Dollar Index is one of the reasons that we saw this rally. It's up today, 0.4%, but it was down massively last week. In fact, the biggest weekly drop, 3.5% that we've seen since March of 2020, and the 4th consecutive weekly drop for the dollar index. So as the dollar weakens, that allows risk assets to rally. The U.S. 10-year yield right now at 388.93. Amazing as well, because the 10-year yield was up well over 4%, and it finally came down at the end of last week. This is also a real tailwind for equities, although you can see it's coming up a little bit today. It's still holding under 390 right now. And then Bitcoin coming up another 2%. After it had gone down overnight, 16,735. Eddie Vandervelt is going to come on a little bit later, and he says, you know, it could fall a lot more if you look at previous drops before a big rally after the halving cycle. But it doesn't seem to have taken such an amazing amount of pain to me if you consider what's happened with FTX, the big blow up, all that drama, that saga is so incredible, and yet Bitcoin is still holding at a fairly steady level, Anna.
Yeah, we'll speak to the head of Galaxy in Europe a little later in the program to see what they make of all of that market chaos. Let's have a look at the European equity session then, Matt. The futures picture in the US deteriorating, but European stocks managing to keep their heads, really factoring in some of the gains we saw on Friday, of course, on Wall Street, so a bit backward looking, but also lifted perhaps by some of the news flow surrounding China. Kayleigh was talking about that, around the support for the housing market. Maybe that supports some of the exporting nations here in Europe. So that's the broad picture. We have a lot of positivity, not everywhere, but across a lot of these European equity markets. The CAC 40 in focus, up by 0.25% today. But I wanted to mention this because Paris has grabbed London's crown when it comes to the largest equity market in Europe. And this has been something that has been a tussle over this, of course, in focus since 2016 and that Brexit vote. And most recently, it's all about the sector exposures of these two areas. London, it's focused very much on global slowdown and commodities and oil, for example, and the banking sector. Paris has got a boost recently on higher expectations for luxury and consumer goods surrounding reopening in China. So as a result, we see Paris grabbing that crown. The euro at 103.08. The euro has also been on the rise, of course, ever since we got that number on US inflation, which was lower than had been anticipated. That saw some money coming out of the US dollar and into the euro. Well, our colleagues writing about FX here at Bloomberg, one strategist saying that perhaps this has further to run, this euro rally, if you look at what the options markets are saying. I put the pound in here, 117 handle, dropping down from a 118 handle earlier, because we have a lot of UK data out this week on inflation, on the jobs market, also the autumn statement. That's on Thursday. So a busy week of data and information around the UK story. And Roche Holdings down by 3.8%. They held two large trials around Alzheimer's drugs. And sadly, both of those trials disappointed. There have been higher expectations after some better results out of Biogen, but those expectations dashed by the results of those two trials. Right, let's get back to the geopolitics. President Biden is holding talks with China's Xi Jinping ahead of the G20 summit in Bali, marking their first in-person meeting since Biden took office. Myron Brilliance, the executive vice president of the U.S. Chamber of Commerce, spoke with Bloomberg this weekend on his hopes for the meeting.
If they can reaffirm the desire to work together in areas of mutual interest, and they can accept the need to recognize where they have material differences, but keep working on it, keep talking, keep engaging, then we'll say that was success.
Do you think they will?
I hope they do. But hope is not a policy.
Anne-Marie Hordern, our Washington correspondent, is on the road, of course, with President Biden and joins us now from Bali. Anne-Marie, we've seen them meet, we've seen them shake hands. Some of the early wording seems fairly positive or maybe just neutral. What's the focus?
It seemed very statesmanlike as they've met each other. They both said it was good to see you. President Biden really outlining that he wants to be able to have this line of communication and work with Xi Jinping. Xi Jinping also responding the same, also saying fundamentally this is what the international community would want to see. And Xi Jinping saying they want to elevate the friendship. But Anna, going into this meeting, what we've heard from U.S. officials is that there will be no deliverables. There will be no joint statement. They are really just trying to set the guardrails and a floor for this relationship for the future. Remember this summer, the relationship really deteriorated after Speaker Pelosi went to Taiwan. We saw that Beijing cut off communication with the United States on a number of fronts, and the U.S. is just trying to get back to a field where at least there is head-to-head, leader-to-leader discussions. Jake Sullivan, National Security Advisor, said to reporters yesterday what the U.S. wants to communicate to Xi Jinping is that they want to see not confrontation, but they want to be able to have competition with China. But really, this is one of the most important relationships the U.S. has, and it's not just between Beijing and Washington. All capitals around the world, especially on the heels of the president sitting down with those from Japan, South Korea, Australia, these countries specifically also want to know what comes out of this meeting.
What do we know, Anne-Marie, by the way, about the health of Sergei Lavrov and the position of everyone there on Vladimir Putin's war in the Ukraine?
So first, to the health of Sergei Lavrov, the Russian foreign minister. There was an Associated Press report that he has been hospitalized. Bloomberg asked the foreign ministry if this was true, and they sent back a video of Sergei Lavrov working. It looked like he was working at his hotel. I don't have a timestamp for that, but they said this was in response to a Bloomberg report. But actually, it was Bloomberg asking for the status of Mr. Lavrov, given this Associated Press report that says he's hospitalized. When it comes to the Russian delegation overall here, he is, Mr. Lavrov, representing Russia because President Putin decided not to attend the G20. He also was absent at the G20 in Rome. This was prior to his invasion of Ukraine. I spoke with Commission President for the European Union, Ursula von der Leyen, and she said Putin should have been here in person. She said she wanted to look him in his face, along with others from her alliance, to say to him, to confront him about his atrocities in Ukraine. So for many, it is a missed opportunity to speak directly and frankly with Mr. Putin. I think for others, it's also an opportunity that he didn't come is actually a good one because it sort of puts aside some of the awkwardness that would have been with President Putin. But of course, the fact of the matter is this is a G20 that's not going to likely be able to agree on a lot of language coming out of this meeting. We've already saw that happen in Cambodia.
All right, Bloomberg's Anne-Marie Horder, terrific reporting as always from Bali. Thank you so much. Let's head over to the world of crypto now. On the sidelines of the B20 Indonesia Summit in Bali, Binance CEO and co-founder CZ said his firm plans to spearhead an effort with other industry players to set global standards in the wake of the bankruptcy of rival FTX.
No one can protect a bad player, to be very frank. If a guy is very good at lying and is very good at just pretending to be what he's not, somebody wants to violate the law is not going to prevent that. The law can help to reduce that. As industry players, we should be more vocal about it. We should set very strong standards for the industry.
And CZ went on to say that his firm Binance is going to form a recovery fund for firms in liquidity crisis. Emily Nicole, Bloomberg crypto reporter, joins us now for more. So, Emily, his comments around that recovery fund leading to something of a recovery in crypto markets. It's this interesting kind of dark knight, white knight scenario, because dark knight in the fact that he was one of the catalysts for FTX's downfall in the first place, but potentially now he's taking the white knight hat from SBF.
Yes, it wasn't that long ago that we were talking about how CZ's announcement that they plan to sell a lot of its FTX tokens was the thing that was very much causing the problems at FTX only a week ago. And as you point out now, it's very much an opposite story. The only problem is, however, is we don't know a whole lot about this recovery fund that he's mentioned. There's no dollar amount. We don't know if it's his money, if it's Binance's money, and he's asking firms to co-invest on that front. But I assume there will be more details to come in future about what kind of projects they'd be willing to rescue.
It's also it's the least decentralized finance. I mean, it runs contrary, I would think, to everything that sort of OG crypto people are there for. nothing trustless about it. Let's get to the FTX investigations here. What do we know, and how likely are criminal charges to be filed?
So we know now that over the weekend, the Bahamian regulators and authorities over there have looking into criminal misconduct for FTX and Sam Bankman-Fried as well, and that is something that is ongoing. There are also obviously investigations happening with the SEC, the CFTC, and various other regulators in the US into the fallout of FTX. That, however, hasn't really given us any inclination on whether or not customers will be expecting to receive all their money back. On top of that, there was a hack of FTX's accounts on Friday as well. Around $477 million worth of tokens was stolen. We don't yet know any of the details around that, but there is definitely progression happening there. Law enforcement are also looking into it.
Yeah, a lot going on then when it comes to crypto. Once again, Emily, thank you so much. Bloomberg's Emily Nicole joining us with the latest news flow surrounding the crypto space. And we will be speaking a little bit later on to Tim Grant, head of Europe, Middle East and Africa for Galaxy Digital. We'll get his perspective, the Galaxy perspective also, on the latest news flow and this proposal from Binance for a recovery fund for the sector. Now, Fed Governor Christopher Waller said we've still got a ways to go before the US central bank stops raising interest rates. That's despite good news last week on consumer prices. Let's get more with Bloomberg's Danny Berger. I mean, I guess most people know that we've still got a way to go when it comes to hiking interest rates, but still interesting to see Fed official after Fed official coming forward with this pushing back mantra.
Yeah, and part of the reason it's interesting because it's not just pushing back against expectations, it's kind of specifically pushing back against what the market has done. So the full quote here, you said the market seems to have gotten out in front over this one on the CPI report, says Waller, late last night. Everybody should just take a deep breath, calm down. We've got a ways to go. Very zen of Christopher Waller. But listen, this is why he likely feels the need to say this, is because after that CPI report, we had a dollar that saw its biggest decline since March 2020, and then we saw a 5-year yield that fell the most since 2009. All of that results in the chart I have in front of me for a radio listening audience. It's the U.S. financial conditions. They eased about 50 basis points after that CPI reaction, or in the reaction to the CPI, and that presents a problem for the Fed because they want tight conditions, and the market will not be allowing that if it continues to rally every time we get a more positive piece of news on inflation.
Hey, Goldman Sachs says it sees a decline in U.S. inflation next year. This also runs kind of counter to the rest of Wall Street, which has, reduced its inflation worries next year.
Yeah, it has. Jan Hatsis and team, it also sort of follows on from this work he's been doing about this idea that there is a soft landing possible. Now, the team over at Goldman, they lay out 3 reasons why core CPI is going to go to 2.9% by December next year. It's currently at 5.1%. So the first is just that supply chain disruptions have eased. There's more inventories on things like cars, semiconductors is better. He also notes, him and the team also note that peak in shelter inflation looks like it is coming in response to the demand for rental units. There's been about 1 million units put in a pipeline coming to market. That's the most since 1974. Finally, this decline in jobs and workers gap. Things like retail, the more labor-intensive industries, there are more workers coming into the fore and less job openings, and that is likely to reduce some of those wage price inflations, Kaylee.
All right, Bloomberg's Danny Berger, thank you so much. Let's go from the macro to the micro and take a look at some stocks moving in pre-market trading here in the U.S. Anna was mentioning the Roche story in Europe, a disappointing Alzheimer's drug trial and results there. That actually is giving a boost to a competitive product or a competitive product maker. Biogen, Eli Lilly have another alternative drug that they are working on. So as a result, Biogen up about 4% before the bell. Another stock moving higher is AMD, the chip maker getting upgraded at both Baird and UBS. The UBS analysts citing key cycle indicators are looking more positive. So that stock up 2.5%, but sinking lower in early hours is Robinhood. This stock has been on a wild ride, moving 10% plus in the last 4 sessions. Big rally recovery Thursday, Friday after big losses Tuesday, Wednesday, but it's heading back down again as it is caught up in the FTX drama. Robinhood down about 4.5% before the bell, Anna.
Coming up on the program then, Kaylee, we'll speak to Matteo Savary, BCA Research Chief Strategist. What does he make of the latest news lines coming out of China? Support for the property sector. Does that make a global difference to growth expectations? And on crypto, we'll talk to Tim Grant, Galaxy Digital's head of EMEA. A lot to discuss when it comes to support for the sector and where the crisis at FTX heads next. This is Bloomberg.
When I started, I had no idea it was going to turn into this, which is a tracksuit empire. I don't have any investors. All this is all money in. This is me going out and hustling, bringing that money back, and just building it, building it, building it. You gotta think about a person that was homeless at one point, didn't really have any money coming in. The fact that this person was relentless and just determined to succeed and not let rock bottom define him as an individual. I can take things and put them together and take them apart and make them better and put them back together. I respect the craft, so I don't want to minimize and disrespect the value of each step of the craft and do by machine what should be done by hand.
Bloomberg is live at COP27 in Sharm el-Sheikh, Egypt. Bloomberg Television and Radio brings you continuing coverage as world leaders, business insiders, and decision makers gather to take action toward achieving the world's collective climate goals.
What are your top 3 priorities?
There is an ability always to find the new and innovative ways to meet the challenge and at the same time take into consideration the pressures that exist.
Special coverage continues only on Bloomberg, your global business authority.
Welcome back to Bloomberg Surveillance Early Edition. I'm Matt Miller here in New York with Kayleigh Lyons, Anna Edwards with us out of London. I'm looking at the Bloomberg Dollar Index. It came down 3.5% last week, the biggest drop since March of 2020, and it's been down for 4 consecutive weeks in a row. So the interesting thing there is that it takes us below the 50-day and 100-day moving average, and this is a real tailwind for risk assets. For more, Bloomberg's Eddie Vanderwalt joins us now. And Eddie, everyone seems so focused on cryptocurrencies. I'm looking at the original, well, the biggest and most powerful fiat currency, and it's losing a lot of steam here.
It absolutely is. Look, and I think that has been the story of the markets this year, all year long, right? First of all, we had that dollar strength that was playing havoc with markets, and now we're seeing that a little bit of weakness. And I think it's two sides of the same risk narrative. On the one hand, the dollar was the big beneficiary, but also a prime mover in, just taking the wind out of the sails of other risk assets. In that, when the dollar rises, it makes it so much harder for other risk assets to get a bid. The fact that it's turning around, I think that could help stocks in the next coming months.
So that's the dollar story. Eddie, good morning to you. Let me ask you about natural gas. You've been writing about natural gas prices this morning. We actually see a little bit of a nudge higher in gas prices here in Europe this Monday, but they are volatile on a daily basis, of course. Trading considerably weaker than they were in August.
Oh, absolutely. Look, we're not quite at the prices that we were before the Russian invasion of Ukraine, but we have seen prices coming down something like 70% from where they were, back in August, and that's for the winter contract. I think what we're starting to see here is demand destruction in Europe. I don't know about other households, but the Van der Waals household, I can tell you, is wearing fluffy robes for most of the winter already because we're keeping the natural, the heating off.
Why save them for home, Eddie? Share the fun. Bring them into the studio next time. Bloomberg's Eddie Vanderwalt, thank you very much. And for more market analysis, check out MLIV Go on the Bloomberg Terminal. Plenty on there about the gas price, also around crypto. Eddie's been writing about crypto as well. We'll get back to that theme shortly. This is Bloomberg.
names in climate change are on Bloomberg.
Building out local wind, local solar, hydrogen, these are solutions to not just climate issues, but geopolitical issues. We are in a position by 2030 to have 80% of all electricity generated by wind.
Renewables are the safest, the cleanest, and the cheapest form of energy today, especially for countries such as Greece.
Nobody covers climate change like Bloomberg, your global business authority.
Suppose somebody is watching and says, I want to be Ari Emanuel when I grow up. What should somebody do to get into the talent agency business or the business you're in?
Well, it's hopefully what I've taught my kids. You got to be intellectually curious. You got to be, you got to show up. And you know this like I know this. I got on a lot of planes. You just, even though that voice in your head is saying, oh God, I'm so tired, I don't want to do this. You got to show up. You got to be charmingly relentless. You have to build emotional endurance, because there's no straight line to success. It's kind of all over the place, and you have to just be able to work through those things. And then I think one of the things that I do every week is I try to create serendipity.
BSO Now is your online home for weekly Boston Symphony Orchestra and Boston Pops performances. See new concerts that go behind the scenes, plus acclaimed archival concerts. Visit bso.org/now, where the music plays on. BSO season sponsor, Bank of America.
Bloomberg has enhanced search on the terminal to deliver what you need when you need it. Now, you can simply type phrases in everyday English in the command line. Compare financials. Find people. Analyze markets. You can enter phrases or ask questions. What do you want to know today? Ask a question or visit SearchGo to find answers now.
Now, keeping you up to date with news from around the world, here's the first word. In Turkey, authorities suspect terrorism following a bomb explosion that killed at least 6 people in Istanbul's popular tourist district. More than 80 others were wounded. There's a report that the person who planted the bomb has been arrested. Elon Musk says he's overworked. The man who runs Twitter, Tesla, and SpaceX told a business conference in Indonesia that he's working morning to night 7 days a week. He said it's not something he would recommend. Musk just scrapped Twitter's work from home policies and has been known to sleep at work, sometimes on the factory floor. And London is no longer the biggest stock market in Europe. The UK capital has lost its crown to Paris. According to an index compiled by Bloomberg, the combined market cap of primary listings in Paris overtook that of London in US dollar terms. Economic growth concerns are weighing on British assets. Meanwhile, China's relaxation of COVID rules is boosting French luxury shares. And coming up, we'll continue that conversation around China and the global growth story, as well as the UK versus Europe narrative. Matthew Savaret, BCA Research Chief Strategist, is going to be joining us coming up with his thoughts on the remainder of this year and what's to come in 2023. This is Bloomberg.
We've invested more than $10 million in our employees over the past year, and we're going to continue to invest more. We're testing 4-day work weeks to help, especially our working parents kind of juggle that balance between childcare and their work. I know I deal with that all the time. This is really a people-first company. And even in an inflationary environment, you're going to see us continue to lead with our people.
Do you worry at all about a price wage spiral, not just here, but in the industry, in the economy?
Yes, and I think that, this is something that, many business leaders are focused on, and, time will tell kind of how all of this lands.
I think the wage price spiral continues for quite some time, and I think we probably have been a lot less aggressive than we can be, and than many other companies have been.
In terms of raising prices?
Yes, we've taken our time. If you look at a 20-year history of pricing in this company, we've taken about 2% a year on average. We've never taken what we could. We've always taken what we should. We have to pay people more. We have been, and will continue to do so. We'll take a little bit of a margin compression on that, as we've had to, and I think that's the right thing, so that for the long term, Shake Shack continues to be what we're building, which is the next generation's burger joint.
When U.S. jobs numbers are released, Bloomberg brings you crucial data at terminal speed and instant expert analysis. Nobody covers jobs day like Bloomberg.
This is Bloomberg Surveillance Early Edition. Here's what you need to know. High-stakes summit in Indonesia. President Biden tries to keep relations with China from getting any worse in his first in-person presidential meeting with Xi Jinping. Crypto crisis. Authorities in the Bahamas investigate potential criminal misconduct at FTX. And Binance proposes a recovery fund for the industry. And the Fed's not done yet. Fed Governor Christopher Waller says there's a ways to go before the central bank is finished raising interest rates. I'm Anna Edwards in London with Matt Miller and Kaylee Lines in New York. And Matt, we see U.S. futures pulling back a bit more dollar strength creeping back into the markets. Those comments from Christopher Waller perhaps ringing in investors' ears.
Yeah, absolutely. But after a massive rally last week, right, we were up to almost 4,000 on the S&P 500. If you invest in the Dow Jones Industrial Average, you're only down 7%. And if you're a pound investor in the DJIA, then you're up 7%. But futures are down right now, just about 1/3 of 1%. We were looking at 39.92 in the cash trade at the close on Friday. We do still have 4 hours left to go, but we've come a long way, baby. The Bloomberg Dollar Index up today, and that's why you see futures down, right? That's a little bit of a headwind after the dollar index last week had fallen 3.5%. Now it's gaining back some, and we're also seeing the 10-year yield climb a little bit, 6.5 basis points right now. 387.61 is the level on the 10-year. Bitcoin coming back up after being down overnight, so back up on that news that CZ wants to start some kind of lender of last resort fund, $16,749. So a little bit of a recovery, but of course, Kaylee, it's too late for those who had any exposure to FTX.
Yeah, and on that note, Matt, of course, we've seen a lot of companies in the crypto space absolutely roiled over the course of the last week. The likes of Coinbase and Robinhood. Coinbase, of course, a rival exchange. Robinhood, once seen as potentially a takeover target for FTX, saw massive, massive declines across Tuesday and Wednesday, then big rebounds with the broader market on Thursday and Friday, but once again, they are heading south on this Monday morning. Coinbase down about 2.9%, Robinhood by about 4.4% as we all continue to watch and wait and see ultimately how this saga may come to a close post-FTX bankruptcy. You're seeing declines elsewhere in technology as well. Tesla is down about 1.6%. I have to question how much of this may just be a reflection of key man risk after Elon Musk over the weekend was talking about how overworked he is as he tries to run Tesla, SpaceX, and Twitter all at the same time, potentially a lot of balls in the air, and will one drop maybe is the question. But then you also have to consider that, as Matt mentioned, Treasury yields are moving higher today, so that has a tendency to weigh on some of those mega cap players, including Amazon, which is also down about 1% before the bell, Anna.
Kaylee, European equity markets then this Monday managing to keep their heads above water just as we see US futures on the back foot. So European stocks up by 0.2%, but that positivity fading a little bit as we get closer to the US session. The CAC 40 up by 0.25%. And I mentioned this because Paris, now the home of the European largest stock market, not London anymore. They've been jostling increasingly for position to grab onto or to keep that crown since 2016 and the Brexit vote. And now it seems the prospects for luxury in Paris seen as more positive than the prospects for basic resources and energy-related names, all to do with China's recovery, of course. Roche in focus, down by 3.8%. Kaylee was mentioning earlier how Biogen is on the rise, and this is all to do with the relative performance of their drugs in trials when it comes to Alzheimer's. So just over the weekend, we heard from Roche, just this morning, in fact, we heard from Roche that their 2 trials, large studies they've been doing around a new Alzheimer's treatment, they had been disappointing. They had failed to meet their key objectives, unlike a recent Biogen study. And so as a result, a bit of a move away from the Roche share price, as you can see there. And the euro, 103.03 is where we trade, down by 0.4%. But this, of course, after quite a rally in the euro after last week, that disappointing, or at least lower than expected, maybe not disappointing at all, inflation print out of the United States, sorry. So that has meant money into the euro, and our colleagues writing about FX strategy suggest that the options market suggests there could be more appetite out there for the euro, Matt.
All right, we will definitely be watching that. But right now we're focused on Biden and Xi Jinping meeting in person for the first time since President Biden took office. President Xi spoke at the start of the meetings, G20 meetings in Bali. Listen in.
The world expects that China and the United States will properly handle the relationship. And for our meeting, it has attracted the world's attention.
Let's get back down to Indonesia and check in with Bloomberg's Anne-Marie Hordern, who's at the G20 gathering. So President Biden preparing for this meeting, what do we expect?
Well, Matt, don't expect any sort of deliverables to come out of it or major announcement between these two countries. What the U.S. is looking to do, in their words, is set a floor on the relationship. How do they manage potential conflict with China, although they really want to make clear to Xi Jinping and his delegation that they want to seek competition, not conflict. But clearly there is a lot these two individuals have to get through, especially since we've seen relations deteriorate over the summer following Speaker Pelosi's visit to Taiwan, when we saw China end talks with the United States, especially when it came to military issues as well as climate change. The 3 most biggest issues to really focus on is, of course, Putin's invasion of Ukraine. We know that Xi Jinping and Putin earlier this year said their relationship has no limits. Is that starting to be fractured? We saw when Olaf Scholz went over to Beijing, Xi Jinping actually said he does not want to see nuclear force used in Europe. The second, of course, is going to be the fact that the U.S. has rolled out sweeping curbs on technology that China desperately will need if it want to advance not just its tech space, but also its military space. And third, of course, and the one that will maybe potentially mean the most fireworks between these two countries is going to be Taiwan. The President of the United States, on a number of occasions, most recently in September, sitting down with 60 Minutes, has said that if there was a, quote, unprecedented attack on Taiwan, the U.S. would go defend it.
All right, Bloomberg's Anne-Marie Hordern reporting from Bali, where night has quickly descended. Thank you so much for joining us for a second time this hour. Let's continue the conversation now on China. Joining us is Mathieu Savary, BCA Research Chief Strategist. Mathieu, how are you thinking about the China story, both from a geopolitical risk standpoint as well as a growth standpoint, considering this is the second largest economy in the world, and it seems they are taking step after step to really shore up support for that economy?
Yes, thank you. When it comes to the economic element, we've had at BCA a pretty negative stance on China. At the end of the day, there's lots of debt, the COVID-0 policy, etc., all major anchor. But we are seeing very important steps being put in place to shore up this economy. Going forward, what is worrisome is that the debt picture is so bad at this point in time in China that it's likely to take a lot more than what has been announced so far to give a boost to that economy. So for now, I'm still slightly skeptical about the outlook for China.
Okay, Matthew, good morning. So you're slightly skeptical, but if you do want to play the Chinese recovery, if you become convinced about COVID policy changes there, about the prospects for the Chinese economy, is a good way to play it looking at European listed companies that have exposure? I asked this on the day that we hear that Paris has now got the crown as the largest stock market in Europe, taking that away from London where we are right now, partly because of expectations about luxury recovery and China.
Yeah, so here I think that the main market in Europe that would benefit from an improvement in China when it's going to happen would actually be the UK market and the German markets, which really are the ones that have the most exposure to the kind of stuff that China is trying to boost ultimately. At the end of the day, the measures being put in place right now are to try to put a floor on the real estate activity. And if they are successful in doing so, it will increase investment, buying of machinery. It's going to be very positive for resources stock, industrial stock, and Germany and the United Kingdom are the two stock markets the best exposed to those trends.
Yeah, okay, that's really interesting, given the way that the market is focused on luxury at the moment. Matthew, thinking about the UK, it's a big week. We've got lots of data coming out around inflation and unemployment. We also have an autumn statement to focus in on, so a big budget fiscal statement coming through from the government. There's been talk over the weekend that perhaps they'll try and push off some of the tougher spending and tax plans until after the next election. How do you think the market would view that kind of action?
Well, I think the market would respond by actually putting upward pressure on UK interest rate, because at the end of the day, the problem of inflation in the UK is right now. So delaying the spending cut and the increase in revenues means that the fiscal policy will not deal very much with the inflationary problem in the British economy. So at this point in time, if this is indeed what comes through this week, I think there will be repricing of the Bank of England again toward a more hawkish path of policy.
What are the assets you want to buy then, Mathieu? If you have cash right now, do you get in? Do you keep it in cash? Or what do you pick out in order to protect yourself against those risks?
Well, I think that right now an asset that surprisingly is attractive is actually the German bond market, because the situation is very different when it comes to inflation in the European Union and the Eurozone and the United Kingdom. On the continent, the inflationary dynamics are much more limited to imported inflation, to energy in particular, while in the UK we're seeing more sign of domestic inflation, wages, rents, etc. So what we are seeing right now is that the ECB is relatively fairly priced in terms of how high interest rate will rise in the Eurozone, which is not necessarily the case in the United Kingdom. And we're seeing signs that the energy impulse to inflation in Europe is peaking, and that could help bring down the German yields, which also are very sensitive to the evolution of the global business cycle.
What about in the U.S.? Do you have any assets here that you think right now have depreciated enough that you want to buy, or do you think the rally that we've seen has put us back into levels that are too expensive?
Well, when it comes to stocks, we are inclined to fade a little bit the strength that has taken place lately. True, in the very near term, 1 to 2 weeks, there could be a little bit more upside for stocks in general and tech names in particular, since they have a very high beta to inflation fear, etc., etc. But at the end of the day, what concerns me is the fact that earnings expectation globally, in the US, in Europe, doesn't matter where, are still too high, considering the fact that the global economy remains weak, that central banks are not done increasing interest rates and are likely to inflict more pain on the global economy. So it's this earning element that worries me. So I'm not super keen on jumping into following this rally for much longer.
Speaking of things you may or may not be super keen on, does crypto have any role or any interest to you, Mathieu, or is this now something you can't touch with a 10-foot pole?
In the near term, I think it's still something that I would not touch with a 10-foot pole. We've had, obviously, this FTX bankruptcy, but considering how systemic FTX is within that space, there's likely to be aftershocks from what's going on right now. But on a long-term basis, I think that we are getting close to a point where crypto assets might become attractive once again. There's a bit of a capitulation taking place. Investors are abandoning the space. And I do believe that in the long term, there is room for all the payment services that is associated with crypto. When we think about Bitcoin, I think that Bitcoin has a bit of a quote-unquote safe haven in the space, and really strong emphasis on the quotes here, is something that on a long-term basis is going to remain attractive going forward.
Okay, yes, for the radio audience, Mathieu was really, really emphasizing those quote marks. Mathieu Savary, thank you very much. From BCA Research, we appreciate your time. Thank you for joining us. We'll stick with the crypto theme. Coming up on the program, Tim Grant joins us, Galaxy Digital's head of EMEA. What does Galaxy make of the saga at FTX? What sets the various players apart now in the crypto space? We'll get into that conversation. This is Bloomberg.
Global inflation and recession, an energy crisis intensified by war, and the aftermath of a pandemic. Next week, world leaders meet in Bali for the G20 summit. And Bloomberg is there, bringing you the news and analysis.
A confluence of economic, climate, and security crises make it a uniquely challenging time.
All of these are pointing towards a big slowdown in trade.
It all starts next week, only on Bloomberg, your global news authority.
There is quite a lot of players in our space that try to cut corners to grow quickly, and that actually destroys consumer trust. When they don't trust them, they don't go to them. They actually go to a platform they trust.
That was Binance CEO and co-founder CZ speaking on the sidelines of the B20 Indonesia summit in Bali. Actually looked like he was right on stage, so not really sidelines. Joining us now is Tim Grant, Galaxy Digital head of EMEA. I guess the B20 is their answer to the G20. Tim, what do you think about his proposal to start this kind of lender of last resort fund, a Fed-like fund, in decentralized crypto land? It seems strange to me.
Well, good morning, Matt. Yeah, I don't think it's strange. I think it's actually a sign that after everything we've seen in the last few days, which is, let's face it, a pretty catastrophic outcome for the trust element, and I agree with CZ on that one. This is a whole question of trust. It's encouraging to see CZ and other exchanges think about how to give that level of transparency that's going to give everybody the comfort that they need, especially in the institutional side, to get into this marketplace. Now, the precise design of what he's suggesting, we don't know yet, but we're interested to know more.
Concerning the trustless issue, shouldn't real crypto investors hold their own money in their own wallets? I mean, it doesn't make sense to have this trustless currency and then give your keys to some exchange.
Yeah, it's one of the biggest dichotomies, I think, of this whole crypto movement over the last few years.
Our position on this is that what we're going to see is a bifurcation. We're going to see true DeFi infrastructure, which is truly trustless and it's self-sovereign, a custodial element. You manage your own keys, you manage your own destiny, and you have the transparency you need. And there's room for that, and we've seen that be very successful. It's notable that the DeFi constructs have really survived really well in the last few months. However, at the other end of the spectrum, we're going to need CeFi. CeFi is not dead. You need regulated, truly transparent institutions, and you need those intermediaries that large institutional pools of capital will want to pay some rent to in order to have the safety that they need. I don't think there's a conflict in those two ends of the spectrum. The challenge is right in the middle, which is where we appear to have landed with the old FTX scenario.
Okay, good morning to you, Tim. Nice to see you. And I know you say you don't know much about what Binance is planning here, this industry recovery fund, but you say you're looking to find out more. Is this something that Galaxy could see itself wanting to get involved with?
Well, look, Binance, we have a good relationship with Binance. We have to. All the big players in this space talk on a regular basis. So this is this morning's fresh news. We love the intent. The earlier intent that we heard throughout the weekend was this notion of cryptographic proof of reserves. This is an important element. Can you use this technology to really give people the confidence they need that your funds aren't going to be misappropriated, as it appears to have happened with the FTX situation. So we like the intent. Whether the design is the right one and who should come together to make this happen is an open question. It's too early to call, but we very much welcome the intent here.
Okay, and let's backtrack slightly. FTX, what has sparked this crisis in crypto, if we can call it that. You at Galaxy had some exposure there. How far through are you in understanding what went wrong and whether you can get your money back?
Yeah, well, we're still in the process, and we're going to be in this process for a while. It seems there's such a sprawling empire there. I mean, if you look back at the story, and look, from a Galaxy perspective, we have very kind of traditional risk management processes. We have various committees. We have an exchange risk committee, so we keep an eye on all of our balances that are out there. As an institutional market maker, we've got to be on all these exchanges. We saw that CoinDesk article last Wednesday that kind of shed light on the Alameda situation, but because an element of trust was there, we didn't think that at that point, like most people, that FTX would be kind of an issue. Now, CZ was the one that I think really called it for everybody at the weekend when he proposed to dump $500 million of FTT tokens, which is the native FTX token, on the market. He was quite cryptic about why he was doing it, but that was enough for us to start pulling our balances. And you know what? We got a bunch of our balances out, and that's important. But we, just like everybody else, are very upset that at some point they ran out of money and we couldn't get our further withdrawals out. So where does that leave us? Well, we're a customer of FTX, just like everybody else, and we're trying to figure out what will happen. Every day there seems to be another news item about something that comes to light. How will this ultimately be resolved, and who will get their money back? We don't know yet, but we're going to certainly keep at the table.
Well, and Tim, there's a question as well as to how this changes the regulatory landscape. I mean, is there a risk that even if contagion can be contained, that the regulatory fallout just completely changes the face of this industry permanently?
There's definitely a risk, and there's nothing more certain than death and taxes, they say. I think from our perspective, there's nothing more certain than death, taxes, and regulation. Like we're firmly in that side, as I described earlier, of centralized, publicly listed, transparent at Galaxy. That's important to us and important to our clients. So the regulated element means a lot to us, and we do talk to, we're regulated by upwards of 30 regulators in all the jurisdictions that we operate around the world, so this is very familiar to us. There's always a risk at a time like this that the baby gets thrown out with the bathwater, that certain regulators who maybe have a negative view of the space use this and jump on this to kind of really hold us back. I think the flip side, though, is we welcome sensible regulation. So the hope for us is that the dialogue increases between the industry and the regulators, and ultimately that this leads us to a better place more quickly. If that's the outcome, then maybe that's the silver lining to this kind of horrific last week or so.
All right, Tim, thanks so much for joining us. Great to get your insight, the views from Galaxy. Tim Grant there of Galaxy Digital. Tune in, by the way, to Bloomberg Crypto every Tuesday at 1 p.m. New York time, 6 p.m. in London. It's our weekly show that covers the people, transactions, and technology shaping the world of decentralized finance, which looks like it increasingly needs centralized finance to help out. This is Bloomberg.
get stronger that moment that you're lifting the barbell. You get stronger as your body is making repairs, making recovery. Recovery is when and how you get fitter, faster, stronger.
Recovery technology includes everything from massage guns and foam rollers to compression boots, hyperbaric chambers, cryo chambers, infrared saunas, and even infrared pajamas. And athletes are partnering to become investors to take those products mainstream.
When you look at tech in sports right now, it's completely innovating the way training's going, completely changing the way recovery's going. I think sky's the limit as far as where it can go.
But while some of these products can feel amazing, it can be difficult to differentiate between what really helps the body and what just tricks the mind.
Every time you're chasing the latest, greatest, newest tool, you're probably chasing a mirage.
A lot's happening on Wall Street.
I think Jay Powell said things that were indefensible.
Need to catch up?
This is Bloomberg Wall Street Week. I'm David Weston.
We've got the information and insights
We think that's the next secular shift.
from businesses most influential and instrumental.
It's knocking it out of the ballpark.
It's a challenging dynamic.
This is a level of uncertainty that we haven't had to deal with.
Bloomberg Wall Street Week, live tonight with replays all weekend on Bloomberg Television and Radio.
This is Bloomberg Surveillance Early Edition. I'm Kaylee Lines with Matt Miller in New York and Hannah Edwards in London. Now let's take a quick look at what is ahead for the remainder of this week. State leaders from around the world are meeting in Bali in Indonesia for the G20 Leaders Summit. We know that U.S. President Joe Biden is currently meeting face-to-face with China's President Xi Jinping on the sidelines of the summit, the first face-to-face meeting of those two leaders under the Biden administration. Then in the UK, Chancellor Jeremy Hunt will be putting forward the autumn statement on Thursday, accompanied by the OBR's economic forecast and the fiscal outlook. We'll also get UK inflation data and the Bank of England's quarterly monetary policy report earlier in the week. And the 5th annual Bloomberg New Economy Forum is taking place in Singapore. Plus, major U.S. retailers will be reporting earnings and will be getting retail sales data ahead of the all-important holiday spending period. So a very, very busy week, Matt. But of course, today our eyes are on Bali and that meeting between President Biden and Xi Jinping.
Yeah, absolutely. Although I'm really interested to hear what Lael Brainerd has to say in a few hours. I think we'll all be following that very closely as Goldman Sachs says inflation could come down more dramatically than expected next year. The Fed, at least as we know as recently from Christopher Waller, they're still on inflation watch.
Yeah, absolutely. Inflation expectations in focus as a result of that survey data out on Friday. From a UK perspective, lots of data and, of course, that autumn statement on Thursday. That is it for Early Edition. Surveillance is ahead. We'll be hearing from the Airbus CEO, among others. This is Bloomberg.
So you've built a successful company, but you might not want to run it for the next 10, 15, 20 years, or do you? And if you didn't, would you want to go into government? If the president called you to serve our country, would you go into government, or would you start another company?
I love what I do. And I feel like I have this luxury with 23andMe that it keeps evolving. You know, we started out just as a, started out a consumer company. We're thick in research. We got into drug discovery in 2015, and now we're getting to the delivery of care. So I've been really lucky with 23andMe that it's been endlessly interesting. And I'm surrounded by incredibly talented, brilliant individuals where I learn from them. And what I always advise people to do is, like, you should take jobs where you're learning. And if you stop learning in a job, then you should quit. And, like, frankly, when people leave 23andMe, like I say, if you're not learning anymore, you should move on. So I'm 100% committed to 23andMe. That said, my other passion is other direct-to-consumer. Like, I want to build out a true consumer-empowered healthcare world, like one that is outside of the existing system. And there's no greater force than government.
The top names in business are on Bloomberg.
This was not a solvency issue at all for the pension system. It was a liquidity issue. So a liquidity problem had to be managed.
Nobody covers business like Bloomberg, your global business authority.
My base case has the U.S. economy slowing, flirting with a recession.
We think at a minimum, Fed funds gets to 4 3/4, 5%.
The Fed needs to see more to say we can decelerate then from 50 down to 25 and ultimately pause at some point.
There is no Fed member that wants to go down in history as losing the fight on inflation.
We might actually have a scenario where we could have a soft landing because we are now seeing inflation begin to come down.
This is Bloomberg Surveillance with Tom Keene, Jonathan Ferro, and Lisa Abramowitz.
Here we go again, live from New York City for our audience worldwide. Good morning, good morning. This is Bloomberg Surveillance on TV and radio. Alongside Lisa Abramowitz, I'm Jonathan Ferro. TK is going to be back in a couple of days' time. And the equity market, we're down 0.4%. Happening right now, a meeting between the President of the United States and President Xi.
Yeah, talking about the red lines and figuring out where they are and what they can do. Is this a Xi Jinping that is more conciliatory with respect to creating a better relationship with the U.S., given some of the moves overnight, or not? Or really going to take a hard line and create a bit more of tension going forward?
Looking for a news conference from the president that should commence around 8:30 Eastern time, so that's 2 hours and 30 minutes from now. Also need to talk about the outlooks. Finally, someone had the courage to press send, enter, go on the Bloomberg. The outlook for 2023 is so difficult to publish anything right now.
The year of yield. That is Andrew Sheets. He put Morgan Stanley. He was the brave one that you just said that pressed the button. And I will just say that I took off on Friday and the market managed to rally tremendously. So there you go. I should take off and I guess that let everything go. How much are we talking about peak dollar? Morgan Stanley was talking about that. We also saw that from Deutsche Bank. George Saravello is talking about peak dollar. And how much are we talking about ongoing yield and the search for yield and people going into some of the bonds that were most beaten up this year?
Mike Wilson talked about a volatile path to 3,900. 3,900 is basically where we are right now. He's looking for huge downside in the first quarter to discount the earnings risk for the year ahead, then ultimately to rally from there quite aggressively into year end. But from point to point, year end 2023 to year end, which is where we are right now, he's basically looking for a flat market on the S&P.
Under the surface, what does that mean? What does that mean with tech leadership? What does that mean with small caps? How much do small caps keep getting a boost given that the dollar is expected to peak out? How much do you see a rotation into energy given how much you've already seen the outperformance year to date? These are some of the questions that really the calm of a stasis belie.
So-called bear market rally, can it continue? Your equity market right now down 0.4% on the S&P 500, coming off the back of the biggest week of gains on the S&P since June. On the NASDAQ 100 last week, up almost 9%. Biggest week of gains going back to November 2020. The Treasury market reopens, yields are higher by 7 basis points. We'll talk about the Governor Wallet pushback in just a moment. Your 10-year 388.18. And Bramo, some dollar strength coming back after a weaker dollar weakness. Euro dollar 102.93. We're down 0.5%.
So, John, I'm sure that you read the same notes that I did about peak dollar and that we've already seen it. How much do you actually think that there was credence behind the moves that we saw, given the bond market was closed on Friday, given some of the lack of liquidity in some of these markets and that there has been so much chop? I mean, do you buy this idea that we saw some sort of peaking out and that there's something substantive behind the incredible weakening that we saw over the past couple of sessions?
It comes down to CPI, downside surprise. That's what sparked it. You've got to ask yourself, okay, Do we continue falling in the right direction? I think most people assume we do. At what pace? Still unknown. To what destination? I have no idea. And how much damage do we do in the economy in between? The global economy, for that matter, not just the US. And they're all the questions you've got to ask to come to any kind of conclusion as to whether this continues. And if you think I've got the answers, I don't have the answers. It's why I'm sitting here and we booked the good guests to go through those kind of things.
And as you've hinted at, a lot of people have not come out with their outlooks for next year because perhaps nobody really has that crystal ball except for Mike Wilson at Morgan Stanley. All right, so today, 8:30 a.m., that is the expected roundabout time. President Biden will be giving a speech and taking questions from Bali, Indonesia, after his meeting with Xi Jinping. How much do we get a sense of what those red lines are? How much do we get a sense of how much Xi Jinping is trying to lure American business back? There was an article over the weekend that I thought was interesting about how banks were retrenching from China quietly, also seeing how much BlackRock is closing the bond ETF. Today, we also hear from Fed Vice Chair Lael Brainerd, who's going to be joining Bloomberg's Peggy Collins for a discussion. How much does she reiterate what we heard from Chris Waller? Also, at 6:30 p.m. tonight, Fed President John Williams is talking with a discussion at the New York Economic Club. And then this evening, the Bloomberg New Economy Forum kicking off in Singapore. Dr. Henry Kissinger, former U.S. Secretary of State and National Security Advisor, Catherine Tai, U.S. Trade Representative, among the first speakers. I'm particularly interested to hear what Catherine Tai has to say, John.
Looking forward to that. It's going to be a big event a little bit later through the week. Let's start with Laurie Calvasina, Head of U.S. Equity Strategy at RBC Capital Markets. Laurie, Mike Wilson and Morgan Stanley talking about the volatile path back to 3,900 after maybe testing something like 3K in the first quarter. Laurie, earnings risk. Can you walk us through where you see the earnings risk in the economy right now for corporate America and where you expect that to land?
Sure, it's a great question, John. And let me say, look, I don't think we're out of the woods on earnings yet. That being said, I do think it's possible that markets put in the ultimate low in October because 3 to 6 months before you get the final earnings downgrades is typically when the stock market bottoms in big sort of challenge periods. But just kind of backing up from that, I think we're at 208 for next year on earnings. I think the consensus is still tracking around, say, 232, 233. What we really have baked in is moderating inflation, which is really tanking our revenue number. It doesn't really end up helping margins. We find that margins are really more of a function of wages, where we've still got some wage growth baked in on things like productivity, pricing. I think as inflation moderates, that hurts pricing power as well. So we've really got a ratcheting down of earnings and kind of, flattish to slightly down levels with what we saw last year in the S&P 500. This is very similar in our minds to the 2015, 2016 backdrop where we just kind of don't really go anywhere on earnings for a few years. But I think, honestly, John, I don't think the street really has a good understanding of how much moderating inflation is going to hurt earnings because of that link to revenues.
How much are we going to see the leadership change, Laurie, in a sustainable way over the next year?
So I think this is a great question, Lisa, and I think this is probably, one of the bigger challenges to figure out for next year, frankly. Typically, when you are in a sluggish economic growth backdrop, growth stocks outperform. So that would point you to things like technology, communication services, consumer discretionary. And one of the things our economists have been talking about is that when you kind of get out of this short, shallow recession, we're going to see pretty sluggish GDP for a while. I do think, though, that there's a big leadership change afoot here. So I'd be very, very selective in looking at some of those growthy parts of the market. We like tech, but we don't like the others. If you think, though, about kind of the value-oriented sectors, we're starting to hear some people make a growth case for them, things like energy, things like industrials, and you're starting to see some pretty good outperformance in sectors like that over the past month or so. Frankly, energy's been doing great all year, but now we're starting to see that broaden out to some of the other value-oriented sectors. So I would say stay pretty balanced, have a little bit of growth, have some value exposure. I think that's going to work better in the near term anyway. Be balanced and try to be more selective within those buckets as opposed to just leaning into one big bucket for the longer term.
Laurie, you brought up something about how you are leaning into big tech potentially. And this is one of the big questions over the past week with the tremendous rally. Does it have legs? Can it reassert itself? Are you really in the camp that it can?
In terms of the rally, look, I would say I probably share Wilson's view that we're going to be volatile for a bit longer. One of the things we pointed out is that markets in 2022 are really trading on the 2002 path. And if you look at, sort of what happened back then, we had a January peak, a summer low, a big October low. We rallied back pretty fiercely into Thanksgiving, and then we turned around and gave most of it back going into a new low in March. And so on the one hand, I do see the potential for the rally to continue a little bit in the longer term. I think, frankly, on things like the election, that's already baked in. I think there's a lot of people who think the Fed moves have been exaggerated. we can save that for another segment. But I do think that we're going to chop around. And I think, whether or not you think the rally can continue, sure, I think it can continue a bit in the short term. But I do think there's a tremendous risk that we do give a lot of it back in the first quarter.
We won't save it for another segment. You can't bring up the Fed and not talk about the Fed, Laurie. Let's talk about it now. Gina Smilik of the New York Times yesterday was live blogging Governor Waller's speech down in Australia. And this is what Governor Waller had to say. The market seems to have gotten way out in front. We're going to need to see a continued run of this kind of behavior before we really start to think about taking our foot off the brake. Laurie, is the Fed still in charge of where this market goes and how far this rally can go to the upside?
Well, look, I think it was really interesting. We said in our weekly, John, that, we liked what we saw in the CPI print, but the thing we didn't like is we knew the Fed was going to come out and quash it with harsh rhetoric. And that's exactly what we ended up getting with Waller. And look, I think that, to some extent, maybe they are losing a little bit of control. I think that they are trying their best to clamp down on the enthusiasm. But I'll tell you, John, I don't think the peak inflation, peak Fed narrative ever really went away. I think that those people just got really, really quiet over the last month or so because they were tired of having their heads ripped off.
Well, they're loud now.
So I think they're loud now because when we saw that CPI print came out, there was a massive sigh of relief. There was a massive sort of uncoiling of enthusiasm. And I sympathize with those who say the market went too far. But at the same time, having talked to a lot of investors that, had been doing work on used car prices and all these other components of inflation coming down, I understand the release that happened. I understand that relief valve that occurred.
Laurie, final question. What are you telling clients about what's happening in crypto and what it means for them, even if they're not in the asset class?
Yeah, so it's a great question, John. I don't cover it. We sort of leave that to other people at the firm. But one of the things we have talked about is the extent to which the average retail investor, is involved. And I know I saw a Good Morning Consult poll recently that said about 19% of those that they surveyed owned crypto, which tells me that perhaps it's not as pervasive as some fear in terms of the impact to the average investor. We're going to have to see. We're getting a lot of information right now. But as I've talked to some of my friends sort of in the wealth management community, remember, I speak mostly with institutions, but as I've talked to some of my friends in the wealth management community over the past year or so, I've heard things like, well, my clients aren't really involved in crypto. Their kids and grandkids have tried to get them involved, but they've said no. So, for the moment, I still view this as a contained implosion, but we do have to watch it. There's a tremendous correlation between the S&P and Bitcoin. And we do view Bitcoin as a risk barometer for stocks. Stocks have been sort of defying the carnage that we've seen in that space recently, but we'll have to keep an eye and, frankly, just see how bad this is. It's something we've got to watch.
Laurie, brilliant to catch up as always. Let's talk before year end. Laurie Calvasini there of RBC Capital Markets. Bramo, do you think the Thanksgiving conversations will be a little bit different around the crypto story? Do you think it's the grandparents telling the kids now what's what, as opposed to the kids telling the grandparents?
I suspect it won't get brought up too much, or perhaps it will with a bit of tongue-in-cheek, a bit of, how do you think about that now? But at what point does it really have a broader effect, and at what point would we really be talking about this at all if it weren't for free money that could have pumped it up to start with?
Governor Waller has some advice for everybody. Everybody should just take a deep breath, calm down. We have a ways to go yet. Governor Waller speaking in Australia yesterday evening. Coming up, 7 o'clock. In the next hour, Priya Misra, the head of global race strategy at TD Securities. Equity futures down 0.4%. Live from New York with Lisa. Tom Keane away. I'm Jonathan Ferro. This is Bloomberg.
Keeping you up to date with news from around the world with the first word, I'm Lisa Mateo. Well, President Biden and China's Xi Jinping are having their first ever in-person meeting. They shook hands before sitting down at a hotel in Bali, Indonesia. The city is the site of the Group of 20 summit. The president told Xi the two have a responsibility to show that China and the U.S. can prevent competition from turning into conflict. In Turkey, authorities say Kurdish militant group PKK and its U.S.-backed affiliates in Syria were behind a deadly bomb attack in Istanbul. The explosion killed at least 6 people and wounded 81 in the city's tourist district. Turkey says the suspect has been captured and identified her as a Syrian national. In the UK, Chancellor of the Exchequer Jeremy Hunt is expected to delay much of the $65 billion spending cuts and tax hikes until after the next election. That would both protect the economy and shore up support for the Conservative Party as the country heads into recession. Bloomberg's learned the bulk of the savings would be delivered in the final years of the 5-year forecast. Roche says a long-awaited experimental drug for Alzheimer's disease failed in a pair of large studies. The drug didn't slow clinical decline in people with early Alzheimer's. It's another disappointment in research field that's been marred with failures. And shares of Japan's SoftBank have plunged today.
The company failed to announce a widely expected stock buyback. Plus, SoftBank's Core Vision Fund posted a $7.2 billion loss in the July through September quarter. Sliding startup valuations have forced the world's biggest technology investor to go into defensive mode and virtually halt investments. Global news 24 hours a day on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Lisa Mateo. This is Bloomberg.
To name a couple of your babies. I don't know if I'm asking you to choose amongst your children, but some of the most recognizable buildings by you, of course, the Millennium Bridge, London City Hall, the Reichstag, and the Great Court British Museum. What was your favorite project to do?
The Reichstag does stand out because, first of all, it's an energy manifesto. So it transformed something that was dependent on fossil fuels. It uses all the technology to produce something which is essentially carbon neutral. And as a public building, that's a statement. It's a symbol of a city. It's a symbol of a nation. It incorporates works of art. It's recycling an existing building, which, as I mentioned earlier, is the ultimate in sustainability. If you can give a new life to a building, it also creates public space at the roof level. It is the most visited parliament in the world, so it puts the public above the politicians who are answerable to them. And that, of course, was made possible by the politicians. So it's a demonstration of democracy in action.
Global inflation and recession, an energy crisis intensified by war, and the aftermath of a pandemic. Next week, world leaders meet in Bali for the G20 summit. And Bloomberg is there, bringing you the news and analysis.
A confluence of economic, climate, and security crises make it a uniquely challenging time.
All of these are pointing towards a big slowdown in trade.
It all starts next week, only on Bloomberg, your global news authority. Multi-trillion-dollar industry. There's a lot of ground to cover.
Commodities got absolutely crushed.
We'll show you what's happening in ETFs like no one else. Bloomberg ETF IQ. Monday on Bloomberg. Bloomberg is live at COP27 in Sharm el-Sheikh, Egypt. Bloomberg Television and Radio brings you continuing coverage as world leaders, business insiders, and decision makers gather to take action toward achieving the world's collective climate goals.
What are your top 3 priorities?
There is an ability always to find the new and innovative ways to meet the challenge and at the same time take into consideration the pressures that exist.
Special coverage continues only on Bloomberg, your global business authority.
BSO Now is your online home for weekly Boston Symphony Orchestra and Boston Pops performances. See new concerts that go behind the scenes, plus acclaimed archival concerts. Visit bso.org/now, where the music plays on. BSO season sponsor, Bank of America.
Earnings season is here.
The earnings are starting to pour
The
in.
numbers are holding up better than expected.
Sorry, business isn't all that bad.
Bloomberg breaks the numbers first.
Netflix earnings going to cross the wire.
A big beat. Stock is up more than 8%.
Coming in stronger than their rivals.
With exclusive expert analysis.
Finally back to growth.
The mother of all opportunities.
What is the industry to watch?
That's where the rubber hits the road for Goldman Sachs.
It's going to be a really interesting earnings season.
Bloomberg Television and Radio. The fastest numbers and analysis you trust.
Live from New York City this morning. Good morning to you all. Let's get you a flavour of the price action this morning. Equity futures are down 0.4% on the S&P 500. The pushback coming from Governor Waller as we get the trading week underway. And Governor Waller sending yields much higher, 2s out to 10s. Governor Waller saying, take a deep breath. Take a deep breath, Bramo. He feels like there's a risk of July all over again, the premature easing of financial conditions off the back of one major downside surprise on CPI.
This goes back to a question you've asked repeatedly. How much will the Federal Reserve allow this market to rally? How much is there sort of a Fed cap on how far stocks can go? And is that basically what Fed Governor Chris Waller is saying? Hey, guys, we don't like this, so we're going to jawbone this down, and we're going to keep raising rates until you stop it.
His language wasn't a million miles away from what you just said.
No, it was actually quite similar.
It was pretty informal, pretty direct, and I imagine more Fed speakers this week will say the same thing. They don't want to signal they're going to back away anytime soon. But if you're in the market right now, you're not in the business of working out what they're going to signal, what they're not going to signal. It's what they're going to do and where inflation's going to land. And people believe that's the start of a trend back down towards trajectory.
How much are they grasping
towards
at straws?
target, rather.
I mean, did you actually dig under the data and see some of the, for example, the healthcare price crash that people were looking at, and they were saying it could be technical? I mean, there are reasons why people might say it's perhaps overly stating the deceleration, and the Fed is very worried about getting over their skis with saying, okay, we've reached it, hallelujah, peak is in, let's go to some kind of weakening trajectory, and then go back to the 1970s.
That's the Fed conversation dealt with. Let's deal with the G20. We're not done. We'll talk about it later. On the sidelines of the G20, before that gets underway, President Xi and President Biden meeting, shaking hands. Apparently that's a headline. No fist bump this time around. Woo. This is what the president had to say. We share responsibility, in my view, to show that China and the United States can manage our differences. On the ground, Bloomberg's Anne-Marie joins us right now. AMH, what's top of mind as this meeting is ongoing and is set to conclude in the next couple of hours? The president will speak at 8:30 Eastern Time.
Yeah, that's right, Jonathan. Waiting for it to wrap up and what the president has to say to reporters about this meeting, because there won't be a joint statement. There really are no deliverables or announcements that these two countries are going to make out of this meeting. What we have heard from officials is that they want to set the floor on how they deal with Beijing and really setting the guardrails. Three of the biggest issues that are likely going to come up and the most contentious are going to be Putin's war and invasion of Ukraine. Of course, we know that Xi Jinping, his only really friendly ally on the big international stage, is Xi Jinping, and they met in Uzbekistan, and Putin even said to Xi, we know you have some questions and concerns. The second, of course, is what's going on in the technology and chip sector. We have the Commerce Department with these sweeping curbs that China really needs this technology. This is something that has drawn the ear of Beijing. And then finally, and the most contentious is going to be, of course, the Taiwan Strait. And this really came to the forefront this summer when Speaker Pelosi made that visit to Taiwan. Beijing came out cutting off ties with the United States on a number of fronts when it came to communication and conducting military drills. This, for Xi Jinping, is really a red line. And we want to see what the president has to say, because as you know, there has been a number of occasions where he said the U.S. would defend Taiwan.
Some people might call this the appetizer for the G20. I think it's in reverse. This is the main event. Anne-Marie, if there are no deliverables available for either leader going into this meeting, can we get a communique at the G20?
It's a great question, Jonathan. We're just off the heels of a multinational summit in Cambodia, and there was no G20 communique. And that is because Russia said they could not sign their name into something in terms of the language that they say the United States was pressuring other countries to sign. Clearly, that language would have been regarding the war in Ukraine, calling it Putin's invasion of Ukraine, actually calling it a war. This is something Russia will not be able to sign up to. They continue to say this is a, quote, special military operation. So you can see the divergence we are seeing amongst countries. And it really puts countries like India, like China in very difficult positions, because at the same time, they want to maintain good relations with Russia, even though a U.S. official said it to us, there's probably some embarrassment in Beijing about what is going on in terms of Putin's invasion of Ukraine.
Anne-Marie, coming into this G20 meeting, President Biden actually gained his Senate back from the brink of a lot of rumors. People thinking there was going to be a red wave. There wasn't. How much more energy does that really give him, or more of a mandate to go out there and pursue an agenda that is his? And what does that mean? What is he going to do with that?
Biden said yesterday in Cambodia he feels strong going into this summit because of the fact the Democrats were able to retain control of the Senate. And Tina Fordham said it on this program last week. She said she thinks Biden is going to be walking into this Xi Jinping meeting with a bit of swag in his step because of the fact that it wasn't a red wave. This just gives Biden and his team more momentum to pursue this agenda abroad, especially when it comes to foreign policy. But we've talked about this a lot. When it comes to China in Washington, there is bipartisan support to take a more hawkish approach, and you are seeing that now with this administration. We should also note over the weekend, they really were shoring up what their allies think of what's going on with China, most notably Australia, Japan, South Korea. And one notable aspect they wanted, it seemed, President Biden to bring to the table was really in terms of North Korea. And it seems pretty clear that the United States is going to say to Xi Jinping, you either rein in North Korea or expect a broader U.S. military presence in the Asia Pacific.
I'm not going to pretend anyone at the G20 has any swag. I don't know about you, Bremer. You think any of those leaders have got swagger?
I'm going to let you weigh in on that. Go ahead.
Well, I just did.
Good, I'm glad.
Thank you, Anne-Marie. Wonderful, as always. To your point, you were both talking about it. Certainly both leaders right now emboldened by domestic events. One democratic, the other not so much. But that's really the story over the last couple of weeks.
How much, though, is Xi Jinping truly emboldened based on an economy flat on its back? And you can see that with some of the easing measures overnight. How much does he feel an urgency of putting the economy as more of a priority than, say, what he said in his speech at the Chinese Party Congress? I wonder this especially. Did you see Olaf Scholz coming out and warning German businesses that the time is now to diversify away from China?
Can you make sense of that for me, based on Chancellor Scholz's recent visit to Beijing alongside corporate Germany? Can you make sense of that for me? Because I don't understand those comments.
So I'll bring this to you. I can't, but I'll bring this to you. Basically, avoiding over-reliance on China, in particular in certain areas. He called for areas including raw materials and critical technologies where he wanted to see a scaling back of risky one-sided dependencies, trying to avoid a redux of what happened in Russia. To your point, how does that cohere with the meeting that they just had over in China?
Do you think that's a message for the German companies or for America, American leadership, that we're on the same page, we're going to do what you need us to do?
Well, and it's interesting that this is coming at the same time as President Biden meets with Xi Jinping. How much is that exactly playing lip service to what the U.S. is trying to do, but how much do businesses move in the other way? We've been talking about this for a while.
So much swagger at the G20.
Define swagger.
AMH has got swagger.
Handshakes.
AMH. Fist bumps, is that swag?
Well, she's going to show us some swagger later on.
Equity futures down 4/10. From New York, this is Bloomberg.
I started, I had no idea it was going to turn into this, which is a tracksuit empire. I don't have any investors. All this is all money in. This is me going out and hustling, bringing that money back, and just building it. You gotta think about a person that was homeless at one point, didn't really have any money coming in. The fact that this person was relentless and just determined to succeed and not let rock bottom define him as an individual. I can take things and put them together and take them apart and make them better and put them back together. I respect the craft, so I don't want to minimize and disrespect the value of each step of the craft and do by machine what should be done by hand.
The top names in climate change are on Bloomberg.
Building out local wind, local solar, hydrogen, these are solutions to not just climate issues, but geopolitical issues. We are in a position by 2030 to have 80% of all electricity generated by wind.
Renewables are the safest, the cleanest, and the cheapest form of energy today, especially for countries such as Greece.
Nobody covers climate change like Bloomberg, your global business authority.
Coming off the back of the biggest week of gains on the S&P 500 since June. This is the price action this Monday morning. Good morning to you all. Equity futures are negative, have been negative throughout most of this morning, down about 0.4% on the S&P. On the Nasdaq 100, we're down 0.7%. On the Nasdaq last week, biggest week of gains since November 2020. In the bond market, 2s, 10s and 30s look like this. The 2-year, the 10-year, the 30-year took Friday off. But the 2-year over the previous 4 days, Monday through Thursday, was down 33 basis points on the week. Right now, 438. Yields a bit higher, up 5 basis points off the back of Governor Waller's comments yesterday evening in Australia. Basically, take a deep breath. We've got a long, long way to go. Outside of the bond market in foreign exchange, huge moves, monster moves in FX last week. Euro dollar had its best week going back 2 years. Sterling the same. Dollar yen was negative 5% last week. It's the biggest weekly move, Lisa, going back to October 2008, except October 2008 was risk off and last week was risk on.
Yeah.
So it makes sense of how the yen has behaved over the year so far.
Looking for dollar weakening, for some sort of reprieve. And basically that was what they got. How long this can last, though, and you have a bunch of notes that came out with people gaming out both sides of the story. How much does this really give a reprieve to a highly unconventional monetary experiment over in Japan, especially given that we have not gotten below 7.7% CPI inflation, which is still a very hot number, as Chris Waller reminded us of.
Number one question in the commercial breaks when we speak to guests who are about to come up. I've asked it, Lisa's asked it. When's your 2023 outlook coming out? I think we were all reflecting on that over the last week. Who on earth wants to press send on that thing? Morgan Stanley have done it, I know, overnight. But come on, 2023, that's a difficult year to forecast.
And how often have we heard, basically, can we just go into a bunker, put our head under a pillow and just wake up next year and have it be flat and just miss all the volatility in between?
I always say wait until March. It takes about 3 months to work out what you were wrong about, and that's when you get the new forecast. That's when they start. Around March time, it's like, yeah, we didn't get that right. Okay, we're going to bring you a new forecast for year end.
And if next year is like this year, around April, May is when they revise that and give the next year ahead outlook, because basically it's been a year every month or so.
That's the game on Wall Street right now. George Goncalves has got to play it. Head of US macro strategy at MUFG. George, before we get to the outlook stuff, I know Lisa wants to talk about it. Let's talk about the move last week. Does that resonate with you, the way we moved last week? Or are you pushing back against that?
Completely am. I mean, I was expecting a consolidation. We got a bolt out of the blue, and I think this is really just, again, reflective of 2022 and how the sort of price action that we have, where the illiquidity works on both sides. In this case, we had a setup of really negative sentiment, a decent exhaustion amongst investors on both sides, but the bears can only push it so far. And you had positioning also there too, especially in rates, but even in equities as well. And so it was kind of like this perfect setup for an overshoot in the other direction. I mean, moves that we haven't seen in months, if not ever, in such a short time frame. Those things to me are not sustainable. We should be consolidating, not ripping like this and then having to kind of give it all back. That's not healthy in my opinion. And I think that, that really kind of just reflects on the sort of conditions that we're in right now, which is an illiquid period where people don't have conviction.
When Governor Wallace says calm down, what do you think he means?
Well, those 2 days or so really unwound a lot of the financial conditions tightening that the Fed did the month prior. And so, I mean, the Fed really needs financial conditions to stay tight. They don't want it to be loosening while they're still trying to get their arms around inflation, regardless that perhaps we've seen the peak of inflation and we're heading lower. I mean, we just don't know what that trajectory looks like and how low will inflation really get. So, calming down is, hey, we're not done yet, and you guys are getting ahead of this.
Well, that's only one side of the story. I was reading a George Saravellos note from Deutsche Bank talking about how Friday was a big day. The peak in the dollar is behind us. That was the title of this. And he was saying it wasn't just with respect to the CPI, but also because China has made noise about perhaps opening up a little bit more. And we also have seen a bit of a retreat from Russia, from Ukraine. How much do you give credence to some of these geopolitical moves as having a sustainable effect on U.S. markets?
Look, I think they help on the margin. I think that still the cumulative effect of Fed tightening and what still lies ahead. I mean, we have at least 2 hikes, at least I think, or the equivalent of 2 hikes or 3 perhaps in the next quarter or two. Still think the Fed policy still outweighs that, and the cumulative effect of that will really be felt in Q1, Q2 of next year. I just think that we haven't really felt the massive tightening that's happened. This is also true for global liquidity. So even though on the margin, it's kind of good to see the news that we're seeing out of the Russia-Ukraine situation and also China potentially reopening slowly, I just don't think it's going to be the equivalent like what we're anticipating or expecting like in 2008 when China really led the charge. I think it's going to kind of like tiptoe into it. It's not going to be the same effect.
It hasn't been very fun to press send on the year ahead outlooks, as John has been talking about. Andrew Sheets did it of Morgan Stanley. He said next year will be the year of yield and said that that's really where you're going to see an outperformance in certain credit instruments that have not done as well this year, particularly higher rated ones. You're not going to see the same kind of returns for stocks, and you are going to see dollar weakness. Do you agree broadly with that kind of outlook heading into a year where you can see actual yield for the first time that we haven't seen going into a year for many, many decades?
No, I do. And the thing is, we were kind of joking around initially as well about the outlook situation and when to send our reports. I mean, most of us, when we're creating our views, we have like the benefit of recent history, and then we try to extrapolate forward and have some sort of view on the macro as well, market pricing. And that's been so hard this year. And so what ends up happening is most of those trades that you think are going to happen in the following year happen in Q4. And then by the time Q1 comes around, you do have to revise them. So I do think, yes, there's been decent enough yield pickup, and that the safer parts of credit make sense. I've been relatively defensive all year. I still think you can on the margin start to weigh in and average into credit. But if we are truly going to still have some sort of slowdown, I don't think we've seen the delinquencies or the defaults pick up enough to compensate you for. I still think you have moments where you'll have spread widening where you can average in even further. So I'm not really fully on board yet.
George, what do you think is more important for 2023? Is it a path for growth or the path for inflation?
I would say the intersection of the two. So we're going to see the growth slow down. That's going to give cover for the Fed to pause in Q1 and start to maybe even pivot in December, because we're going to get a lot of that data still ahead of us. And we have the minutes next week, which we'll see how their convictions on hawkishness. But nonetheless, I think we're in the point of peaking, pivoting, and then we're going to move towards growth being a larger concern. But I don't think you catch it fast enough until the second half of the year. So I do think that and inflation will probably still be running around 4%, if not higher, up until the middle of the summer. So I still think it's going to be a combination of the two, but we'll be pivoting towards growth.
George, we had a conversation last week, at the end of last week, about sequencing. Do you think inflation is rolling over before growth does? And how important is that when it comes to your call going into next year?
I mean, I think growth has been really volatile, and we had a decent Q3. I think Q4 is going to be on the weaker side. Q1, so I think we're still chopping around the bottom in terms of growth. I think it's the inflation call still matters a lot to make sure that we are truly seeing a turn here. I mean, one number does not make a trend, but the overall kind of conditions are, and the different baskets and the buckets within it, inflation are suggesting that we're heading lower in enough categories. But I do think that if growth doesn't accelerate, then that's going to be a bigger problem.
Right now, we're looking at markets that are pricing at a 4.9% terminal rate for the Fed next year. It had been 5.1%, 5.2% as of late last week, and that's clearly reshifted downward as a result of the CPI. Where do you think markets are wrong?
Look, I think markets are wrong in terms of the longevity of how long the Fed can keep rates at these elevated levels. Anywhere between 4.5%, 5% ish. We could always re-ratchet higher if inflation were to pick up again. Either way, though, somewhere between 4.5% to 5% is the levels of rates that the U.S. economy really cannot sustain. Every time the Fed finishes a cycle, we end up breaking something. It hasn't happened yet. Doesn't mean it won't happen. Look, we struggled in Q4 of 2018 when the Fed funds was at 2.5%. Now we have an inflation problem, and I get why the Fed is going at double that pace. But the U.S. economy and the U.S. leverage system cannot take it.
So, George, what do you see in the actual data that gives you confidence that the market is wrong?
Well, I think the actual slowly kind of deceleration within the auto sector, and the housing sector, of course, is taking a pretty big hit already and has much further to go. The biggest collateral that backs up with the U.S. banking system is the real estate sector and the U.S. bond market. Both one, which got hit pretty hard this year, which will be limping along into Q1, Q2 with massive losses still, unrealized maybe for some, but still a pretty big hit there. And you have real estate losses, I think, that are still coming down the road. So